podcast fam, there has been a lot happening in the world of investing these days, and we are bringing you an epic mastermind session with friends and previous guests that are in this space daily. Should you invest in individual stocks? Should you sign up and use apps like Robinhood? Why can forums like Reddit light Wall Street on fire? Should you jump into the world of cryptocurrency? Find out in today's episode 140, a mastermind on investing, day trading, and cryptocurrency. Enjoy. You are listening to WHOA Podcast, coming to you from Gainesville, Florida. Hello, everybody, and welcome to another episode of the WHOA GNV Podcast, the podcast bringing you businesses and individuals that make you go,
whoa. I wasn't sure if you were going to do it.
Whoa. I am your host, Collin, and my co-host is Michael Dees.
What's going on? I know you're super excited for this one. We've been talking about it for a little while.
Pumped, man. After that episode with Reed, we kind of, we're talking about real estate investing and picking his brain on
what
stuff.
What it's like to have AOL back in 1995.
Yeah. You were joking around about GameStop stock at that time, and we kind of were like, man, the next mastermind should be on this.
And here we are.
And here we are. So episode 140, you guys. I am pumped. So before we get into it, you guys, we have to thank our incredible sponsor, you guys, Colliers. Look at it. We even got Colliers cups, baby. Yeah, right. Cheersing it up. Thanks, guys. Podcast family, have you noticed those blue Colliers International signs all over Gainesville? Those are the signs of progress. GNV Commercial Advisors with Colliers Gainesville is the region's top commercial real estate team. When you need to buy or sell commercial land or buildings, find a space for your business, or lease out a property you own, turn to the GNV Commercial Advisors. They close more than 60 deals a year, y'all.
That's amazing. And let's talk real quickly about the coronavirus and how it's impacted your business. Maybe you've realized you need a different kind of office space, or you have questions about your lease options, or maybe you've been thinking about buying or selling a commercial property, but you're not sure when to act. Or maybe if you can buy and sell that property with cryptocurrency, who knows? But call the GNV Commercial Advisors at Colliers Gainesville. They'll know. They have the expertise and the local experience to help you make the right decision for your commercial real estate needs.
You guys, connect with our friends, the GNV Commercial Advisors, at colliers.com/Gainesville.
And thanks, guys.
Yeah.
Appreciate it.
So you guys, today on the show, we have four friends who are previous guests and investors here to talk about money, investing, crypto, and all the crazy stuff that's been happening out there on Wall Street, Main Street, and your street. Nice. You fellas, welcome to the show.
Thanks. Glad to be here.
You're like, who talks first? I don't know. So this is definitely a different kind of format. You guys know our mastermind. We do these every 10 episodes. And so what we'll do to start is, let's just go around the table really quick, introduce you, your business, and then we'll dive into some investing and money stuff.
Cool. Yeah, I guess I can go first. Alex Quintero from GNV Entertainment / Empower Media. I kind of got started here in Gainesville, cutting my teeth in the entertainment scene as a DJ, and then formalized that into a business, and get blessed now to not so much entertainment nowadays, but working with businesses and empowering them with online marketing, online events, and more actually recently podcast itself too. So just passionate about empowering people, and that's what I do.
Love it.
Thanks.
Awesome. I'm James Virgilio, co-founder of Chacon Diaz and Virgilio Wealth Management, a fiduciary firm. I've been on the podcast before, which we talked in depth about all sorts of financial topics.
We did.
And then I'm also the co-founder and co-host of the Gator Nation Football Podcast.
Yeah.
All right, Stephen Courson. Last time I was on here, I was getting ready to launch the podcast, The Stephen Courson Show. Very original name, I know. It took a lot of creativity for that one. So I have been in the corporate technology world for a long time, following blockchain for years now. It's part of the reason why I'm here. And currently working for a multi-billion-dollar technology vendor, and the founder of everything.money, the website.
Nice.
Cool. My name is Eric Lenasbunt. I own Bunt Backline Event Services. We do audio-visual lighting for all sorts of concerts, events, things that aren't happening right now, but all sorts of things. And then I have a couple other interests. I own a piece of commercial property, and just bought into a bar today, actually, and starting a food truck, and I've got way too many other things going on to mention.
You're like me. You want to be involved in a lot of different things.
Yeah, I really,
love that, dude.
I have a million ideas, and I want to turn them all into businesses, and I should really probably stick to one or two, but my main one goes quite well, and I enjoy it, and then I day trade and dabble in mostly options as well.
All right, cool. Yeah, so let's dive in that, because I know a lot of our audience is probably hearing this and they're going, so why did Collin invite these guys to be on the show? I mean, obviously, it's pretty obvious with a couple of you guys, but the other two just really being entrepreneurs but kind of explain your individual story when it comes to investing. Is this just something that you picked up, you do on the regular, just Why did I invite you here?
Sure. Yeah, well, that's a good question, right? Maybe only one you can answer. But I think that's even part of, why it's a better conversation, because like myself, I don't come from the wealth industry or the financial management, just kind of got into it a couple years ago, downloaded Robinhood like most people did as their first kind of platform, and have ever since become obsessed with just making the money work for me, right? So I'm actually interested in hearing more from a wealth kind of management industry standpoint, how you guys see these things and all that. But yeah, just gotten into investing more is kind of a fun thing. I'm a big believer in the long-term game, which, is not maybe conducive to options and that sort of thing. But that's why I just like to preach to people and tell people goal-oriented over the long term. So it's kind of where I come from, and interested to see your guys' perspective on things as well.
I guess we'll keep going in a circle.
Yeah.
That works.
It's working so far.
Yeah.
Why not?
Until it spirals out of control.
There you go.
In the mid 2000s, I went to work for a Wall Street firm coming out of grad school from UF, and then after the real estate bubble crashed, I started my own firm in 2009, which was an interesting time to start a wealth management firm. It would, one of the worst collapses. It was not a good money-making time, but it was a great time to start a fiduciary firm, which that word is known to some of you, probably not still known to all of you yet, but it was really unknown to most people back in 2009. It's gained a lot of traction in the past decade. But, I started the firm because I believed heavily in investing and the impact it makes in all of our lives, and really doing it in a way that legally bound my interest to my clients' interests, so they knew that anything I said and did was in their best interest. And that felt like a really worthy thing to do. And so here we are now, 11, 12 years later.
Awesome.
All right, so I started my career, I graduated from the University of Florida and went to go work at a technology research company called Gartner in 2009, January. So great time to actually have any kind of job because I, coming out of college, did not realize how bad the collapse was and what that meant from an economic perspective. But over the next few years, as saw the impact of it, I had realized that I was in an amazing position, actually making a decent salary. I had virtually no living expenses. I still remember I had a brand new apartment down there. It was a 3-2, and I was paying $250 a month in rent. And I still ask myself, where did my money go? Because I don't know what I spent it on. But anyway, that was actually the start of my investment journey, because I realized when I graduated, I didn't know a damn thing about money. And, despite, going through college, all this other stuff, and about 2010, 2011, I realized that I was missing out on some massive investment opportunities. And at that point, I just started reading everything I possibly could, learning about the stock market, how the economy works, different things like that, because I just wanted to make sure I didn't miss out on any obvious investment opportunities that were slapping me in the face ever again. So that was kind of the beginning of it. And another reason why I think I'm here that is a little relevant, I actually have probably a pretty decent understanding of the technology of blockchain and how it works, which is what crypto is essentially founded on. So for me, I got into the crypto world specifically probably back in late 2016, early 2017, because it was a hot topic on the corporate level, and blockchain in general, has been something that's been a buzzword there for a while and will continue to be very disruptive. So that's kind of my story.
Cool.
I'm super fascinated by blockchain. I hope we get more into that personally. But I probably 2-3 years ago, 2017, 2018, I don't know if I just hit a point where I think things were finally starting to smooth out a little bit business-wise, where I wasn't having to think 24/7 about my production company, about my business. And I don't know if it was mental boredom or what, but basically I can't stop Like I don't watch Netflix and stuff at night. Like I study, I read things, I do things. And so at some point, I think I saw like a YouTube video. One of the guys was like, "Hey, want to make $1 gazillion?" One of those type of deals. And I watched the video and I didn't, I knew that was BS. Like I knew that they were selling a stupid thing. But I think it referenced options in that. And I was like, what is an option? And so I kind of went down this rabbit hole of YouTube videos. And I think at that point, that night, probably on my phone, I opened a little TD Ameritrade account. I put like $100 in it. And I just started like super micro trading with it. And I tried paper trading, but that I could never keep up with that. Like when I had actual money, even if it was $100, I would still like check it every day. And so I started doing that, and it just became something that kind of consumed me. Like every day, morning and night, I would check on it a couple times through the day. Had a couple like good size wins, just stock trading. Good size, I mean like $100, and then I made like $300 on a $100 trade, and it's like, oh my gosh, 300% gains, this is amazing. And did that for a little bit. Basically, I've been flat for years now, just kind of trading like that. And then early last year when the pandemic hit, I was still just trading with like a couple $1,000, and I'd mostly it was little options contracts like, hey, Apple's looking like it's, there's lots of reasons why Apple's uptrending, so I'm going to buy an options contract for an expiration a couple months out because I think it's going that direction. Just calls and puts, no fancy. You can get into butterflies and iron condors and all these other strategies with option.
I have no idea what you're talking about.
Yeah, it's fine.
Like, what? Butterfly?
It's totally fine. I'm actually just now getting into some of that to a degree to hedge. But anyway, I was just buying options contracts, which is a lot like buying and selling stocks. They just move a lot faster. Which is a little dangerous because it becomes a little bit like gambling in some ways because it can really, I had a contract the other day, I bought 10 contracts and it went for $2,000 and it was at like 10 grand 5 minutes later. Now it'll plummet equally as fast. So it's a very fast game. So I just really kind of got addicted to that and trying to actually figure out what was causing things to move. And so I've just, every day, I think I watched an hour of stuff this morning after I dropped the kids off at school before I went to my real job. And so I'm still, I'm just part-time.
So have you figured it out?
I haven't figured it out, no. No, but my goal at the beginning of the pandemic, similar to your business, our business screeched to a halt.
Mm-hmm.
We had March 12th, we had 67 phone calls for cancellations for what is normally our busiest season, like $250,000 in business, like devastating type of business day. And I was like, you know what? Maybe I could do this. Maybe I could, I'm not going to burn any more money than it's already in that account, but maybe I could, make an extra $40,000, $50,000 a year doing this part-time side trading. And so I had a pretty good year. I didn't quite make that, but I did make close to it.
Dang.
And so a large part of that was I was able to focus more attention on it. But
right.
No, I don't feel like anyone who tells you like I've been trading for 2 years and I've got it all figured out is either super lucky or they're just an idiot talking. Like it's not a thing.
More
it
the
takes
latter than the
years.
former, I think. Yeah.
All right,
Most people won't show you their portfolio.
Yeah.
They just talk about it.
So this is why I'm kind of excited about this episode because I think it can help a wide variety of listeners, right? I'm probably more on the dumb end because like I literally got into I guess it depends how you look at it. Back when I was 21 years old, like I opened up, a Roth IRA, right? I started maxing that out every year, and that's been growing wonderfully, and like very much focusing just on the long-term game, right? But then when all this pandemic stuff happened, and there was no sports, and there was like really nothing, I was like, I did have this inkling, and I was right. I should have held on to the stock, but I went, you know what? Everybody and their mom is going to be on Zoom. So let me go buy a share of Zoom stock, and it was like $130, and now it's it's over $400. And I sold it way too soon, but I think I sold out like $190 or something. But that got I was like, all right, let me download this app that I heard called Robinhood. Let me buy this share of stock. And so I did it. And then like 2 weeks later, I had like 18 grand. And like from just, I'm like, oh, I got addicted, right? I'm like, oh, this is fun. Like I kept putting more and more and more money in it. Now I've pulled all that out and don't have anything in there really. And then I like messaged Mike, and we started an investing private channel on our Slack, and we're like sharing notes, right? Like, and we just kind of got hooked. And I would say that Mike, like, you can speak to this. I feel like you're more hooked than I am now. I feel like I kind of like got you into this, and now you're like really into it.
Yeah.
'Cause you're checking every day, right?
Oh yeah, I check it religiously. So I mean, my whole thing started back when I was in 6th grade playing the stock market game, and that was like literally cracking open the newspaper and finding stocks to see how they closed the day before, which I think is pretty archaic to a lot of people that might be listening to this. And then once the internet came about, there was an AOL channel where you could go and buy fake stocks and just monitor it. And so I always had a passive interest in it. But yeah, it was around May of 2020 that you got me to download Robinhood just so you could get a free stock out of me.
Oh yeah, that was right. I wanted the free stock.
And
right.
Little did I know that I would get, slightly addicted to it. And at first it was just, here, let me put, if I'm honest, I don't have residual income, but however much if I can maybe not go to the bar as much, let me throw that bar money out here and throw it in something like Tesla or just, have fun with it and learn a little bit. And one of the interesting things that came about that was 3 days after I first downloaded it, I found this penny stock, and I just kind of laughed it off and just bought it with change, whatever I had left over the account. But I kept it in my little watch list on Robinhood, and I watched it go from about 32 cents to 20 cents to 16 cents to 8 cents, and I just kept watching it. And I saw what it had its IPO at maybe 3 or 4 years ago, and it was $20-$30, and so it started this parabola back up, and then as I watched it go down to 8 cents back up to 16 cents or so, I'm like, oh, why is this ticking back up? I started doing due diligence into the company. I see that they're getting ready to launch this main diagnostics, so I started getting really into researching the company that I was watching, and then so I was like, hey, for fun, let's just put all my money into it, and that 16 cents went up to about $1 3 weeks later, and I had my first like 600% gain, and I was like, this is awesome.
He's like, come rich, Collin, I put in my 2 weeks. See ya.
and that was my first of 2 600% gains that I've made in 1 month of trading, except I also had the downside of that too. I rode it through the plummet as well, so I'm on my way back up a third time. But learning, I think I'd like to think I'm learning more. I did get caught up in the whole, and I know we're gonna get into it, but the whole Game Stop, AMC, the short squeeze attack that happened with the Wall Street Bets Reddit accounts and stuff like that. I actually got into AMC, and that was my second ride up.
Did you ride that one down too?
I rode that one all the way back down.
They always
diamond hands. I kept hearing, like, oh, the short squeeze is gonna happen, and I'm like, I'm here for it.
He's in it for the roller coaster.
So I was short on GameStop when it was $35 before it went parabolic, and but fortunately I was short with puts, with options, so you are limited. You can only lose as much as your options contracts are worth. So my max loss I could possibly take, it was like 10 contracts, was like $5,000. So I actually I stopped myself out at $2,500 loss. I was like, this is ridiculous, because it kept hitting 40, and that was kind of its resistance for a little bit, and then come back down. I was like, all right, now's my time. Here we go. Now we're going down to 20, because that's where it should have gone. And it kept doing it, and it was after like the third time, and it was starting to break 40. I was like, this is bizarre. I'm out. Like,
okay,
I can't do
because
this
then
anymore.
the social movement.
So there's probably
I'm glad I got out.
There's probably a handful of people who don't know what we're talking about right now. Most people probably do if you were anywhere on social media. Like, it was the craziest thing I've ever seen. But I know that you two specifically, James and Stephen, like, had made some like posts around it on social media. And why don't you, one of you two, or like both of you, kind of chime in and kind of explain, what happened?
James, if you want to talk about the stock, I'll actually talk about what I think happened socially. If you want to split it like that.
Sure. I mean, well, what happened is something that's happened before, just in a different manner of things. And like we talked about, the stock market in the short run is truly gambling. If you're looking at 30 days, 40 days, it is not a source of value. Warren Buffett's famous for saying that. He's totally right. And because of that, if half the table decides that we think a stock is going down and the other half thinks it's going to go up, and we can convince a bunch of people to agree with our side, we can theoretically put a lot of pressure on them. They might keep buying the position, etc. That's essentially what happens in a short squeeze is, what happens, right? Wall Street Bets finds out that this big, evil, greedy hedge fund has got this short position on GameStop, and they're putting a lot of pressure on GameStop.
How did they find
stock.
that information out?
Well, it's
public record.
Yeah, it's public record in a public company.
To publish their position.
So you can see every month they publish what they have and what they're shorting and what they're longing, and so they know it. And okay, look, let's get these guys. They're putting pressure on the downward price, and we can talk about short selling, whether it's good, bad, or indifferent. But for the story purpose, that's putting downward pressure on the stock price. And if you're able to drive the price up, you put pressure on the hedge fund, because in order for the hedge fund to maintain that position, they have to keep putting more and more and more money in, and it's an exponential curve. So if they're short $1 million and you can get the price to go up 400 or 500%, they're going to wind up owing the brokerage firm that they're holding the money with, 1,000%, because they're on margin. It costs them money to borrow short. So basically that's what happens, right? It's an exponential curve. They essentially bankrupt them effectively, but then they come in and get capital from the outside to help keep themselves alive, knowing that in the long run, which for them was about a month, that stock was going to come back down. If they could simply outlast, this sort of bump up, then it would come back down and they'd survive, which is what happened. But short squeezes are not uncommon. Big hedge funds have gone against each other frequently, trying to do this to each other. And at the end of the day, if you're doing it with a sane mind, you're doing it because you're betting on what you think the actual price may be 20, 30, 45 days from now, not what you're going to talk about, which is what the social media and the Redditors thought. Let's just get these guys. We're not looking at any time frame. We're just going to get them, which almost worked, and we can talk about why it did.
So you said this kind of thing has happened before,
right?
But not in this. It happens all the time, but not in this capacity. With using
micro investors putting millions of people coming in on one company. And
so who's the one is the other hedge funds that are normally making
large positions?
Sure, or anyone who thinks, hey, I think they're wrong, and I also think that if I put enough pressure on them, I'll make them leave their position. So if you play poker at all, you can put pressure on your opponent by increasing your bet size. Even if technically the math is like, this is not a home run play for me.
Right.
If I can put more pressure on him, knowing that his cards aren't that great, he might fold. And that's kind of the same idea. And therefore you get big short-term gains if you can just put pressure on a weak position. So the boldness of what the Redditors did was remarkable, because it wasn't like they took on a hedge fund that was not well capitalized.
No.
To execute that short squeeze to the level they did which was why it was so historic. It was unbelievable that they're basically like throwing rocks at the Great Wall of China and then essentially knocking it down temporarily. Which is remarkable.
The thing that was remarkable about it, from a social perspective, was that market manipulation is real, right? And it's not a secret. But the thing is, most people are unaware of it because most people aren't in the stock market, right? But anybody who's been in there for a while, we understand that, hey, you can manipulate the price of a stock just like people can manipulate the price of Bitcoin if you have a large enough position in it. So it's, there's a lot of things you can do there. But from a social perspective, what was very interesting, I was fascinated just reading a lot of the feeds, was that people were making... when I say retail users, retail traders, just so everybody knows, a retail trader is just an everyday person like you and me. We're not part of like a large hedge fund or anything like that. So the retail, whether they were coming from, Wall Street Bets, which is where it started, then you had the whole fiasco with Robinhood, the trading app, happen, and they've come out with their explanations since then, saying that, it was actually a legal thing, and there's still a bunch of crap behind everything that they're saying. There were canceled orders. There's a lot of different stuff. Yes, some of it was due to some, legal and financial mumbo jumbo I won't get into. But then the other side of it was the fact that there was just blatant fraud here. There really was. Mm-hmm. And what happened was, when that kind of became mainstream, even if everything Robinhood did was on the up and up, the thing that they are severely guilty of is a terrible job at PR.
Okay. They have so thoroughly explain what Robinhood did.
So what Robinhood did was, as the price went up, Robinhood is a free trading app, right? So how do they make money? They make money on the back end by handling the processing and transactions of some of these larger hedge funds, some of which that were involved in GME. the GameStop stock and AMC. And then they also make it by taking, and this is why you shouldn't have Robinhood anyway, even prior to all this, and why I never recommended it. When you buy a stock, they sell that, your position. If you go to buy a stock for $2 a share, they're selling that to a fund at that price point, and then when you process the transaction, essentially, you might get it back for $2.05, right? So they are selling your bid and you are paying more, but you don't realize that. So by the time you click the button on a stock and it says $2 on it, before it, a term they call latency, the time between when you press the button, all the fluctuations that are happening on the price, the time they go back, sell it to somebody at one of these funds and then they buy it and it comes back to you, even though you actually bought it at $2, you're getting it for $2.05. Now that may not seem like a big deal, but over time it's huge and it's giving an unfair advantage to these hedge funds. But at the end of the day, that's how they make money. That's the price of admission to use their platform, since they're not charging you for any trades, right? The other big thing, and this is we can get into this a little later, but on the crypto side, you do not own the crypto. So if you buy Ethereum, Bitcoin, Doge, whatever it is, you do not actually have a wallet for that in Robinhood like you would if you were using something like Coinbase or Binance or any other platform for it. And that's huge because that's the entire point of crypto, is for there not to be a middleman. Well, they are acting as a middleman and they actually hold it, but they reflect the balance in your account. So anyway, I digress, but back to the point on the social movement. What was interesting is when Robinhood did this and the market manipulation that people outside of the financial industry really didn't know about became aware of it, it caught fire on the news platforms. People all of a sudden who didn't care about stocks were going in and buying it, and it literally became a hill to die on. And people didn't, and this was the most astounding thing, you had people who were posting pictures of their portfolios up 1,000%, 2,000%. They've got tens of thousands of dollars. All they got to do is sell it, and they wouldn't do it. We're in the middle.
Like Robinhood wouldn't let them.
No. They chose not to.
Oh, they chose
not to. Now Robinhood did for a very short period not allow people to trade, but that's just kind of what initially got them in trouble, and they handled that
right.
PR
That was
very
like
bad.
that was a big thing because it was.
That's what made it catch fire.
Sell. You
could sell, but they wanted you to sell.
Yeah, they wanted to drive the price back down.
They wouldn't let you buy, and they also canceled people's pre-existing orders that they had. So, like I said, there's a whole bunch that went into it, what they did. But at the end of the day, it was rotten, and it was to help and then you had the government coming in, and I don't remember if they actually did anything, but even the government was getting ready to bail these guys out. Well, my question to everybody listening is, hey, have you got your $1,200 check yet? Because that's taking months. Well, guess what? The government was ready like that to bail out these hedge funds if they needed to, and they were close to it, right? So that just kind of shows you how you can't really rely on these systems in and of your own. Yes, it's important to play the game, excuse me, but it's just socially, it was this kind of awakening for people to see that this isn't what we thought it was, right? Now, don't get me wrong, it's still a great system. I still heavily endorse it. But yes, there's manipulation out there. So all that being said, from a social movement perspective, that was the most amazing thing to me, was the fact that you had people with tens of thousands, some of them hundreds of thousands of dollars that they had earned in weeks, some of them overnight, and they weren't selling. Yep. The only reason that I found from reading everything that I could see is this was just a big middle finger
to stick it to the man.
To stick it to the man. That was it. It was anger left over from 2008, whether it was direct or indirect, people seeing the jobs that were lost. Nobody went to jail for the collapse of it. And this was them going, hey, I forgot his name. I think it was Cooperman, one of the billionaires on one of it. He was literally crying on CNBC, and everybody was posting this stuff.
Way too much delight in
Oh, there was so much. Everybody loved it. They're like, "Oh, poor guy,
picking on me."
Has to sell his third yacht." So
I don't want to spend
that was pretty much it.
I don't want to spend too much time on like the social media or the social side of this, like in terms of Reddit, because I think we'd have an entire podcast about that alone. But like, it's still. It's still crazy to me that there is that tight of a community on a platform like Reddit, where like how many people had to go, all right, I'm in, everybody go buy this stock?
So
8 million.
8 million people
at Wall Street's bet, like absolute peak, probably 2 weeks into the GameStop mania, they reached 8 million subscribers, up from 1 million at the beginning of January 1st.
But how many people do you think actually went and bought those particular stocks?
Considering the fact that Robinhood can do like fractional shares and all that, I mean, if you go on these threads, and that's what was the most like fascinating part about all this of me is, again, I'm not an industry guy or anything, but like you go on these threads and you read after hours, and the community that's going on, like you got people cheering themselves on for holding hundreds of thousands of dollars. Hold the line.
You're an idiot. Take your profit.
It's absurd. It's absurd.
It really was.
Yeah,
like
that's exactly
$250,000 in profit just sitting on it. And these
Then
are
you
people
have
who
Elon Musk get involved,
Yeah,
which
well-
just king of the nerds right there, right?
So like, the reason I think so many people latched onto it is because of how universal that message is, though. Because you got to keep in mind it's 18 to 25-year-olds too. Is that these are the people who maybe their parents lost everything in 2008, 2009. Like, so it doesn't necessarily matter to them that they're sitting on all these profits. These are the people who watched these Wall Street billionaires raining champagne down on the Occupy Wall Street protesters, right? Yeah. So I think that the message became more than just profit, and became more that it really became like, this is how we get back for everything that they did to us.
I think it's also, so the other thing that I noticed, and when you were talking about that before the social movement, so the thing that I've noticed since the beginning of the pandemic, which was also when I had been trading before that, but that's when I really like picked up my attention on it, is the volume, daily volume on every stock is insane.
It's ridiculous.
So for something to trade, I don't know, like a lower float, so like fewer available shares, a small company, to trade a couple million shares, I don't know, 10 million shares in a day, it would be kind of average for a lot of the stuff I was looking at, the lower price, lower float stocks. And then like yesterday there was one, it had flipped the float. Float is the available shares to trade, so not held by people who own the company or insiders. And there was one ran like $30 yesterday, another crazy short squeeze. And it had already traded all available shares, 30 million float, which is relatively low. Apple or them have billions and billions of shares available, right? So they had already traded the entire float before the market was open. So pre-market hours, which is limited trading, and slower trading and bigger, wider spreads, it had already traded the float. So all that to say, in kind of layman's terms, is the volume of all the people, everybody, all of us that have increased our eyes on trading, increased our amount of trading, has just caused these parabolic moves. And I think it's going to keep going because now you have that stock traded 300 million shares yesterday.
Dang.
And it had no business. I saw SRNE, which is a pharmaceutical company, traded 1 billion shares in a day. It was before that day that it ran and did the short squeeze deal. Like, this had been happening all year. GameStop was just an especially crazy phenomenon. But when SRNE did it, it was the same deal, and it traded 1 billion shares in a day, when it normally traded something like 5 million in a day.
Dang.
So that's been the difference to me, in my eyes, especially with the lower price stuff and all the we have the cure for COVID, and then it goes 600 points, and there's been a lot of that going on.
Yeah, to easily understand that, it'd be like you go to your grocery store that you go to, every week for the past 5 years, and there's some normal amount of people there, and then you go there and there's a stadium full of people in your grocery store buying groceries, and you can't explain why. You're looking around thinking, where did all of these people come from? That's what he's essentially talking about with volume, higher volumes. It's just way more people, way more money being traded and handled, and that of course coincides with the record amount of brokerage accounts that were opened, not only at Robinhood but everywhere else, because of the reasons you all have mentioned yourself. You've experienced a large part of that. Yeah,
so how do you take all of this? I mean, you do this as a profession, long term, like doing advisement for people. I mean, when you see all of this craziness happen, what's going through your mind? Like, are you excited because you're like, oh, all right, like more people are getting into investing, or you're like, oh man, all these people are loons, like the world's losing their mind.
Hey,
like,
why aren't you getting me my 600% return this month?
There's a lot of definitional things, and this is a complicated podcast. Like he said 30 things I thought about, wow, we should define these terms and go off into those things.
No, I know.
But we can't get into all that. But for me, my firm invests based upon human behavior. So it's no surprise to me. I'm an historian. I love studying the past. I think it's the best way to find out what the future is going to look like. And the real answer is none of this is new. There's been manias throughout human history in every country and every culture forever. Tulip mania is the one that get brought up the most.
I was just about to say it.
But all you have to know is what's the price of a tulip. At the height of tulip mania, a tulip sold for $750,000.
That's the flower.
And that's
tulip. If anybody's wondering, that's not an acronym.
400 years ago. And at that time, most of the world did not have any money. So how are these regular people buying it? Well, a bunch of companies opened and basically said, we'll lend you shares, because it kept going up and up and up and up. And as long as stuff goes up, that model works. That eventually went down. People lost everything because, of course, again, it's exponential on the downside if you're borrowing something. So these things aren't new at all. In the 1800s, and in a much more free market than what we have today, where the government was not interfering, you averaged a market crash, so to speak, much more frequently than you did nowadays. But they were much faster, in my opinion, much healthier, because they weren't pumped with stimulus or they weren't propped up. Yep. But the bottom line is people are prone to running into these movements. They're prone to getting excited. But ultimately, the answer to your question for me, what do I see it as, Collin? People are not getting into investing. They're getting into gambling. Yes. It's pure speculation. There's a massive difference. Yep. And again, I like the poker analogies. Poker is not as important as it used to be, but if you want to survive for the long term in anything, professionals survive because they're really consistent. And what happens in investing is people have a lot of success because they're lucky, and they think, I'm crushing everyone, I'm a genius. But enough time goes on and they will lose everything. And there's plenty of studies to indicate this.
90% of traders lose money.
But yeah, and my favorite analogy is like if you're a golfer, or pick your favorite sport, and imagine you go right now and compete with whoever it is at the top of their sport. Right, that's what you're going to go do. You think, I have no chance of beating them. But investing is very interesting, because people think, I can beat whoever it is right now. And you do. Oftentimes, we say this to all of our clients. As professional investors, every single year, some person who knows nothing and has never done a thing will crush us on a one-year return. Because by definition, we're not even going after those things. But that's what makes it tough, is there's this element of spectacular gambling. And lastly, why does Vegas still work? Anyone who's studied anything about math knows I'm going to lose in the long run. But you go to Vegas for a weekend and think, maybe I'll pull that slot machine, or maybe I'll hit a big at blackjack, and I'll just ride out the right moment. But unlike gambling, which you often don't have full access to the Vegas casinos, you do with day trading, or you do with trading, and eventually, do you get out? Do you stop? Do you sell? And so most people don't have a system for when do I buy and when do I sell. They buy, they hold, and they think, when's the right time, when's the right time, when's the right time, and eventually it's the wrong time and you're back down. But this is nothing new. I think that's the important thing to note. It's not new. It's just that it's a little different because of the access everyone now has. But again, let Tulip Mania be the lesson. They had no access to anything at that point in time. Most people owned nothing, yet they found a way to get access to tulips when things went crazy. So it's not that different.
Can I ask a question?
Yeah.
Guys, so do you think that people having more access is a good or a bad thing?
Oh, it's great. I think information and access are great. That's actually the nature of what I posted publicly, was that we live in a world that I think is struggling to get depth. To explain what's happening, right? So, for example, a free market. What is a free market? In my opinion, everybody in every country should really want a free market, because it just means that people can exchange their ideas freely. But we've somehow made this term into something it's not, which is like mixture of governments and rich people. And that's not what the definition of a free market even is. It's just free trade without restrictions. And so I think that at the end of the day, the more information, the more data you have, the better, of course. It's more accurate, better pricing, more information. You mentioned your newspaper reading, right? If you want to check a stock price 30, 40 years ago, you could maybe see it once a day. And while that might be good
calling your broker.
Yeah, exactly.
That's good for your mind, actually. You're more at peace that way. But information-wise, of course, we're far more accurate. Actually, the stock market's far faster at getting to the right price nowadays than it ever was. That's part of why people don't like this volatility and the downside. But that's actually a sign of accuracy. It's not taking us as long to get to the proper price anymore. But those things make people mad, and they think there's cheating, or it's evil rich people forcing prices down. But oftentimes, this is the real story, right? If your company's good, there's not enough people that can short sell you out of business. It's impossible, because everyone else would buy. They want to buy. A free market is what? Two people. You want to buy, he wants to sell. You can't just buy something if he doesn't want to sell it to you.
Yeah.
So that's often, I think, misunderstood in some contexts.
I think it was Mark Cuban that was talking about people shorting companies he owns, and he says he's absolutely a proponent of it because he believes in his company so much that the shorts are only going to help him in the long term on the ride up. So
you made me, when you said that, it made me think of Tesla, because Tesla's been crazy the last 2 years, and Tesla is weird because it acts like a penny stock with all the crazy volatility. So it'll swing 100 points in a day, one way or the other. oftentimes not on news or anything else, just basically on momentum, one way or the other.
Or a tweet.
Or a tweet from Elon.
Yeah.
And, it's just, it is insane how that stock behaves. But ultimately, at the end of the day, it is not going to move more than that. It's got a wide range, but it's not going to move out of that range because it is an actual company with actual products, with actual development, with actual sales. Now, I would, and probably I think a lot of financial analysts would say, I'm not a financial analyst, but a lot of people would say Tesla is grossly overpriced, overvalued right now. If you do like just a valuation based on outstanding shares, what they're worth,
price to earnings.
It's insane. It's absolutely insane that they're one of like the top 5 most valuable companies in the world. However, you're pricing it, again, it's an actual company. So you're no single investor or group of investors. A short squeeze with them is going to be a mini short squeeze, like a couple points, because it is a real company. When you get into GameStop, I think we all know that GameStop is going to be it's Blockbuster Video, right before Blockbuster Video became a thing we all had to tell our kids about that used to exist. It is in that stage. And even if they turn it around, maybe they eke out some business in the next 10 years, they're not a real business in the way that Tesla or Apple or Ford or GM, who are all having kind of turnarounds, are. Like it's just not going to be crazy volatile like that.
Yeah, it's hard to sell me back my digital copy of Call of Duty for $2.
Exactly.
They did the hard one. So, no, I think it's important. I mean, one of the things that they say is everybody looks like a genius in a bull market, right? And we're in a bull market. And if anybody, you can look at the definition between a bull and a bear market, but basically a bull market means it's really good. And, the problem, in exactly what James said, the problem with right now is also boredom, right? Robinhood came in and they gamified money. And, there's been a lot of draw to that because guess what? Everybody's pretty short on money. Depending on where you live, you may not be able to go to work depending on what your local government is telling you. So, because of that, there's more people sitting around who don't have anything to do other than read headlines, the news. And in the long run, I'm hoping that this ends up being a very good thing from a income equality perspective. People, I don't care if you're making $30,000 a year, you need to be investing. It's the only way that you're ever going to get ahead for, if you ever want to retire, right? I do some speaking sometimes at UF, and one of my favorite things to do is at the beginning of the class, I'll ask 2 questions, and I'll go in and I'll say, raise your hand if you think you're going to be a millionaire. And maybe 10 to 20% of the class will raise their hands, right? Then I go in and I say, raise your hand if you think you're going to retire. And then like 95% of them raise their hand. And then I just let them know, it'll be like, well, I've got news for you. If any of you want to retire, you're going to have to be a millionaire multiple times over, especially when you consider inflation. By the time you're 70, we're going to be talking about thresholds of like 10 to 20 million minimum, right? So it's one of those things. There's a massive disconnect with financial education in our country. We know that. I think a lot of people, unfortunately, are going to lose their shirts whenever this fun run that we're having eventually comes to an abrupt halt. My hope is that most people get out before that happens, but history will tell you that they won't, because again, this is about human behavior, and we get greedy, and that's it. So that would just be the little caveat I would say in all this. If you are holding some positions, if you made some money, that's great. Get out. Take the profit and run and hold it, because guess what? One of the most richest men in the world, whose only job he ever had pretty much was investing, is Warren Buffett. And that guy, through the entire downturn, he has been consistent with his company, and for the decades, all he does is wait for things to crash and then buy. There's a saying that goes, when there's blood in the street, buy real estate. And basically what that's saying is when things get bad and there's a disaster, that's when you want to take advantage. That's when there's value buys. Even when the pandemic was happening and everything was going down, people were like, is Buffett going to come in and buy an airline? Is he going to buy this, buy that? He did nothing, because he still didn't think that there was, for his consistency, for his rules, for what he considered value, he didn't think there was still a good enough buy at that point. And he didn't. And he eventually did, but it took him a really long time to do it. So, for everybody out there, I did in the middle of this just want to say, be cautious out there. Be careful when people are getting greedy, when things are good, and take the money and run, and then take some time to really learn, because this is important stuff.
So should people even buy individual stocks or just avoid it altogether?
You should if you know the company. If you do your research, first research on how to research. Most people don't even know how to do that. If it's a publicly traded company, they have to disclose a lot of information that a private company does not. It's available out there for anybody to find, anybody to read. And at the end of the day, you need to go and you need to know that. So if you have an understanding of that, you have an understanding of what the business does, where it's going, and you believe in it, absolutely. Buy it, hold it for a long time. Forget all this day trading stuff. Read reports on it. You can read other smart people that know finances. There's tons of information out there. Is that where I would start? No, I wouldn't start there.
Yeah, so from an academic standpoint, the answer is no. No one should own an individual stock. That's very interesting. I lecture on that topic all the time. That's why you're not going to see very many fiduciary firms, the more sophisticated they get, owning any individual stocks. And what I mean by that is their portfolio is not 3 or 4 or 5 stocks. Of course, everyone owns individual stocks in some segment.
Yeah. Right. Okay.
If you go purchase an index fund, you own individual stocks. You just own 500 of them or 50 of them or whatever, right? But that's not what people think of when they think of owning individual stocks. And there's more than we can cover here. There's so many interesting things, but perhaps the most important thing I could say in a nugget, and this might shock a lot of you, is that value investing is the worst way to invest. So Fama and French are the most famous researchers in the field. They've done a ton of different and you can look at momentum, size, market, which is just owning an index fund, close your eyes, right? Never look at it again, or value. And value returns the least. Now, what does this tell you? One, as Warren Buffett would tell you right now, pretty much the entire industry does valuations. Everybody knows how to calculate a valuation. I teach my interns to do it in 2 days. There's little formulas you can learn online in 5 seconds. Valuation is good. It's important. Don't get me wrong. But the reality is human behavior drives stock markets. And what's that? That's momentum. And momentum is the most productive. In fact, it's the only one on the long curve of 100 years that beats just holding an index. Size doesn't matter. Small, big, large. Neither does value. Now, I'm not saying don't value companies, but I think the important thing here is if you're looking to think you are going to value an individual stock at some level better than everyone else, people that have PhDs in finance valuing the same stock you are, and you have a better valuation than them, that's just foolish. Now, you might get really lucky and say, hey, great, I think this company's worth this, and it goes way up. But don't convince yourself that your valuation is going to work on every other individual stock you look at. So what does this mean? This means that if you're average, if you're perfectly average, this is the core of your question, the odds are much better that you will make more money in the long run if you buy an index fund versus picking your own individual stocks. That's the take home. But what happens? What happens, right? One of you picks an individual stock, say Amazon, at the beginning. 20 years go by, and you're the one that's all over the Wall Street Journal because you're a genius, and you create some story for why you picked it. You have a good story. I knew it. I felt it in my heart. It was amazing. And everyone else reads it and thinks, that's going to be me. And that's what happens.
That's the penny stock.
That's the penny stock point, and that's another example.
And that stock that I know is going to go to $1.
And that's it. And your story's a great one. And if you instead had put $10,000 into your stock, or $1 million, let's say, because you inherited it, and now all of a sudden you're like the darling, you got out at 600%, and you're a genius. And if you're smart, and he knows this from options trading, you stop trading entirely and just write books, and you sell your little course on how to become a rocket scientist millionaire, because you know eventually you're going to zero. So the answer actually is no. All of you listening should not own individual stocks unless it's going to be less than 10% of your portfolio, and it's just something you want to enjoy. View it as a hobby, and if you get lucky, great. But don't for a second think that you are going to be the next person to pick a bunch of individual stocks and own 4 or 5 of them, make a lot of money. The odds are way against you, and the math is not in your favor, generally speaking.
So to your point, I have a question for you, and maybe this will help with some people. So keep in mind, everybody, James is a professional on this stuff. He knows what he's talking about. In your professional opinion, do you think that Tesla is priced so high simply because Elon Musk is cool?
It could be. I also would like to think that being a professional investor makes you tremendously humble, because by definition, you're wrong all the time. We tell our clients that we think our portfolio is amazing, and it's wrong 35% of the time. We're in the wrong position 35% of the time, and we're long-term investors, and we are wrong more than a third of the time. Most professions, you're going nowhere with that, right? So one, you have to be humble. Two, I have no idea why any company is worth what it's worth in the short run. You don't have any idea. You have to let time play out. Companies like Tesla that have so much intangible value are impossible to measure, which is why Warren Buffett to this day is like, look, the world is increasingly being filled with these intangible priced companies. I haven't really touched them. Maybe that's a mistake, but I still don't have any way to know what the heck to do with them. So I'm just going to not do anything. Yeah. But the answer is we don't know. But also, yes, right? Yes, clearly the price is so high because it is the company of our time. And that's obviously going to drive the price up. But again, simple illustration here. You go to your favorite style store and a certain style becomes really popular and it's sold out. And it's sold out despite the fact the company's trying to source more, right? If you ever wonder, why are they sold out of this product? Everybody wants it. Mm-hmm. Well, because they can't make it fast enough for people to buy it. And that is an indication of what people like. It's just simple. They like it. You couldn't look at the perfect reason why this shoe you made is technically superior to others. Oftentimes it's not. People like it, it sells out. And you know that in the concert business too. Oftentimes we couldn't really tell why one musician becomes really famous over another because it's not often skill.
Why does one show sell out and the other one doesn't?
Why doesn't it?
Promotion being equal.
Yeah, and we could spend tons of money. We could forecast things and write great articles and create newsletters and make people feel good about themselves. But the real answer is, who knows? Nobody knows. But we know in the long run that if Elon Musk is good and Tesla's a good company, they will create products people want to buy, services people want to pay for, and they'll still be around. And they'll create value for society. They'll still be there. But in the short run, I don't know.
And we know that our world, I mean, the other good part of the Tesla thesis is our world is moving to an electric vehicle, renewable energy world, one way or the other. I mean, California has now passed a law that they have to by a certain 20 whatever. So the world is moving that direction. So I feel like there's a good bull case. And this is coming from someone, I've lost way more money shorting Tesla than I have. I've been on the wrong side of Tesla for the last year and a half. And I keep going, I'm never trading Tesla again. And then it's doing something that's cueing me in and setting off of my indicators. And I do it again, and then I get burned again. And then I'll
because Elon Musk is cool, and people keep buying it for that reason.
Do not bet against Elon.
I keep shorting it like an idiot. It'll start to crack. I'll short it. And one or two times I was successful, and I hit really big, which is, again, the danger of options.
Yeah, and you bring up a good point. This is my own personal opinion. We could talk about governments and other stuff, but Warren Buffett switched from being an investor who actually famously got really wealthy. This is going to sound crazy easy nowadays, but back then in the 50s and 60s, people were extremely unsophisticated with their investing. They weren't even doing base valuation. So for him, he'd come into a company, let's pick his because his is a good one, where he has a lot of fixed property and inventory, right? Let's say that he's got light systems and everything else, and we can create a value for that. On paper, we can say, what's your company worth if you go bankrupt? You too, with your scooters. Okay, it's worth X amount of dollars. He would come in and buy companies that were trading beneath their bankruptcy level because that was happening. That's a market inefficiency. People were not doing their homework, therefore he would just buy the company and he knew if it went bankrupt, he'd still make money. Nowadays, that's impossible. Way too many people are valuing these companies.
Too much information, too easily.
Too much information. So what does Warren Buffett start doing? And this is what makes me sick. The free market person in me hates this stuff because this is not what you want to see your society doing, in my opinion. It leads to less flourishing for everyone. He buys an airline stock. Mm-hmm. He buys bank stocks. Well, why is he doing that? Because the government's coming in and backstopping all of them.
Right.
So when we come in and we say, and look, if you love electric vehicles because they're great for whatever reason, that's great. I'm not knocking that at all. But if the government comes in and says, I'm going to take a bunch of taxpayer dollars and I'm going to guarantee that this investment or this company gets stuff, the ironic thing to me is that is actually the favoritism we're fighting against.
Yes.
That's the unfair inequality, creating a champion where I pick your industry and your company and not yours. That's what I don't like to see because I want the free market to work that stuff out. And look, if all of us want electric vehicles, then that's what's going to happen, period, because the world will move in that direction. It takes a little bit longer than some of us want, but ultimately that's interesting because that does create real investment stories, but those to me can become the very fraudulent stories. And then what happens? You're Elon Musk, you own Tesla, you've got government money. The government and you now have an incentive to keep each other alive.
Many of you know Mr. Wonderful from Shark Tank, Kevin O'Leary. And he's recently come out and said he is 100% against bailouts in any form.
Yeah, me too.
And I totally agree with him because when you listen to his position, the free market is very much like natural selection, right? If you are a weak company or you are a company who cannot adapt, you are going to die. It's as simple as that. Well, guess what? Somebody will very gladly fill that vacuum of demand and probably do it a lot better than you did, right? So that's one of the things that honestly has made America so great, is the fact that when a company does die, that we tend to replace it with something a lot better, as long as there's demand for that still. And it didn't die because we just didn't care anymore. So that's one of the big things about all of this, is that we don't want the governments coming in and saying, hey, if you move to our state and open up jobs, we'll give you these massive tax write-offs. And then that's how you hear about companies like Amazon, right? Who end up paying like less in tax, income tax than certain individuals, right? Than the people at this table. Exactly. Because they're getting so many write-offs and the government is propping them up for the sake of jobs. And New York did something that was really great, actually. They said no, they weren't, because they were, flirting with what state were they going to put their next big operation center in. They went to New York, and New York said, no, we're not going to give you any breaks. And they kind of stood their ground. And guess what? Amazon went and did it anyway. And because it was a good location. And now they're going to get all that tax money. So anyway, all that being said, we want as little involvement as that as possible, because that's when things start getting screwy. And then that's when people have the ability to buy these companies that are, I hate to use the phrase again, but too big to fail.
Can I say something going back to earlier? When I think you asked the question, like, should people own individual stocks? Because I have a lot of friends that know I'm like constantly checking my stock market stuff, and been doing it for like a little longer than it's been cool. Anyway. So I've been doing it for a little while, and not just like started with this Robinhood craze. But one thing that I regularly tell people, and I always preface it with, I'm not a financial advisor, but do not get into Robinhood, any of the free, all the brokerages are pretty much free or very low cost now. Don't get into it thinking that you're going to beat it. If you want to get into it and actually learn it, which means watching videos, studying, reading, I have Barron's and Wall Street Journal and all these subscriptions and things that I read daily, and try to see where things are going, try to read, where the market's going, why it's going that direction, all that. If you're not interested at even a hobby level of I really want to know why it's doing all this, then man, get an index fund, make 10 points a year without doing anything. So if you got $5,000 sitting there and you're like, I'm making nothing in my savings account, if you put it in an index fund, it's very safe. It's been safe for years. It's going to make you 7 to 12%. Is that about right?
True. Yep.
Year over year, and your $5,000 will be a whole lot more, even if you don't put anything else in it. Or contribute your $50 or $100 a month in an IRA. Do that type of investing, unless you're really either it's a very small amount of money, I'm going to put $500 in my Robinhood account or whatever brokerage account and play with it until I lose it. If you're going to treat it like gambling, you have to actually treat it like a gambler. So if I'm going into a Vegas casino, I would say, hey, I'm going to spend $500 tonight. I'm going to drink all the free drinks they'll bring me. I'm going to drink my $500 worth, and I'm going to throw away my $500. If I go up to 1,000 or more, I'm taking my money off the table and I'm going home a winner. Right? That's how you have to view, in my mind, day trading or stock market dabbling. You're either going to say, hey, here, professional, take my money and make a small amount of money, but a respectable amount. Keep it safe. Don't let it go away. Don't let it burn. Or you say, hey, I'm going in with this little bit that I can lose. I'm going to have some fun. I may or may not have it tomorrow. But the flip side of that is, if you make money, you have to take it off the table. Yeah. Being in cash, this morning, I was almost all in cash, and I'm glad, because there was the S&P took a dump out of the gate. It ended up, it kind of just chopped around and evened out, but it took a dump out of the gate, and all my positions would have been down. I would have been down $5 or $6 grand this morning, and just overnight from a very small, stupid little market correction. And it wasn't that I was some genius. It's just I don't like my money sitting in open positions that are volatile. So I pull my money into cash, and cash is a great place to be. So if you're in a trade and it skyrockets up and you're doing great, like Game Stop, and you just made $200 a share and life is great, take it off the table and get it out of your mind. Everybody does this, myself included, of if I would have held a little longer. Yeah. But for every time, if you would have held a little longer, I would have made this much more money. Yeah, I can tell you, I've held longer and lost way more money.
Yep.
Yeah.
And that's every time I've taken a big loss in a day. I've had $3,000 and $5,000 lost days more than once, and if I were to take those losses out of my trading portfolio, I would be into six figures in the last year. If I just took out my big stupid losses where I didn't cut it quick, where I stayed in, like, it's gonna turn around. But if I would have cut it when I knew I should have cut it, I would have been fine.
You couldn't have possibly guessed, though, and this is something I hear, especially like with new people getting into investing, that, oh man, one more day I would have had 10 grand, or 3 more days I would have 3 more days I would have had, whatever it is. And it's like, yes, but you're only doing that retrospectively. And it's like, you don't understand, or maybe you haven't considered the amount of decisions that you would have had to make between Monday and Thursday to hold that position, especially someone who's avidly into day trading, and you're checking this thing and it's 9:25 a.m. and you're just staring at it, waiting, like, you couldn't have made the amount of correct decisions that it would have taken from Monday to Friday, or the chances that you did is so low that to try to like have this FOMO, I think is absurd. I've also never talked to anyone, quite frankly, I've never talked to an investor who doesn't have millions of these stories, who doesn't have millions of I should have held this, I should have held this. I sold Amazon at $15, right? Like that was I'm saying people have these sort of stories.
I liken it to like fantasy football, where it's like we always have those friends that are like, oh man, but if I would have put this backup quarterback and I would have started him, I would have won. And it's like, yeah, but you would have never done that. Like, why would you have ever started him over Tom Brady? You wouldn't have done that. So the what if game is just kind of irrelevant.
It's
why
really,
didn't it?
And so, like, to your point of FOMO and like, if I would have done this, so GameStop, I was shorting it around 35, broke through, right? I had a moment where I considered going long because I was like, oh, this is going to be an epic short squeeze. This thing's going to go to 70 or 80 bucks. This is pretty crazy, right? Like, which would be a normal version of that short squeeze. And I didn't. I'm actually glad I did, because I don't think I could have handled the roller coaster. I did not touch it after I took my short money off the table and was like, this is insane. I'm just not going to touch this. But when I objectively actually stand back, there would have been, on the way from 40, 45 to 345, there would have been 15 different places where I would have sold it.
Yeah,
There's no way.
Exactly.
There's no way, knowing what I know, that I would have watched it go parabolic, sold it at the top, and then miraculously walked away a millionaire. Like, there's no way. It's not how it works.
So speaking of FOMO and investments, I don't know if it's worth, because I know there's so many places we could go, but I don't know if that's a good time to transition a little bit into the crypto world.
Yes.
Okay.
Definitely want to transition in there. But before we do, like, do you have any, before we wrap up the investing side of it, or the normal stock side of it?
Yeah, you can probably go ahead and go to crypto. I have two points I kind of wanted to weigh in on, but it might be more. It's still broad. Maybe I'll go ahead and do it. So what is it like? How dangerous is it? I'll phrase it that way, for somebody like Elon to have as much power as he does with a single tweet. Like, is that something that should scare people?
He knows it too, because he was on that new app Clubhouse, like in a group speaking and everything, and he said, I gotta be careful about what I say, because if I say something, like, the stock could go through the roof.
Well, we had a president, I don't know if you remember, that has personally cost me about 15 grand from where I was in an amazing position, and then he tweeted something, and then it just
crashed.
Like, just absolute set off all my alerts on the downside, and was like, oh, get out. And that happened multiple times. So I think it's not just Elon. I think it's a lot of people that have that kind of power over the market, but it's always been that way. All it takes is one wacky thing. Like right around the election, there were several days. Like one day is like the most positive day ever, and the S&P's up, and then the next day it's like the world's going to end. There's going to be an election dispute, and it's down. So I think it's not just. That's my take on it. I don't know.
It's all human behavior.
Yeah, we shouldn't be worried at all if free people have influence.
Yeah.
We should be very worried. Again, very worried if government people have that kind of influence. And that's what history would tell you, right? And look at China. China's a pseudo pretend to be free country right now. They're not free. No. Anyone who's been there can tell you that. But right now, China can knock on Colin's business store here at New Scooters for Less and say, you're done.
I mean, to give
why am I done?
A real example.
You're done, and that's it, and your business is over, and there is no more New Scooters for Less, and there's no reason for it, right? And that's what you don't want to have. Right. So if Elon Musk had power behind his influence, right now, yeah, sure, he can influence things, prices can move up and down, but that's the free volition of people listening to him. Whereas if he has the power to actually say, you're a winner, you're a loser, this stock's a winner, that stock's a loser, we're in real trouble. So you said it best, though. Humans have always had tremendous influence. It's always been much more concentrated than it is now. That's the ironic thing. Mm-hmm. Much more concentrated. Before the late 1880s, 97% of the world was in extreme poverty. didn't own anything. So wherever they lived, they had 1 or 2 or 3 people that ruled over them. So Elon Musk is far less of a concern than what we've seen before. And again, we just don't want to have a singular entity have the ability to weigh the axe over us. And that's that's like a big, quick, reductive takeaway. But for me, that's how I look at it.
Yeah, that's good.
To just tap on the China thing very quickly, some of you may have heard of the company Alibaba, right? That was started by a guy, that was called Jack Ma. And Jack Ma, he's one of the richest guys in the world. Due to that, he had another company that was getting ready to go public on China Stock Exchange called the Ant Group. Well, one of the problems with Jack Ma is that he became very outspoken about Chinese government, political issues over there, and let's just say they didn't really like what he had to say. And basically, right before he IPO'd, the government stepped in, Chinese government stepped in, and completely axed it. For whatever reason that they wanted to, doesn't matter if it was fabricated or not, they took him to the cleaners, and he's not on any form of social media anymore. You don't know where he's at.
Well, they did that hostage-looking video.
They literally, people were wondering if he got kidnapped, and he had to come out and be like, yeah, everything's fine, guys, with a clearly scripted thing. So it's like, that is an extreme example, but we can absolutely get there if we aren't careful with what our elected leaders intend to do. So
Sure. And then here's another quick hit on this, because if you're listening to the show, you might think, man, James is like the most far right conservative person I've ever heard. I would actually like to think that I'm like, everyone's left me behind. Like, I just believe in like small government and freedom, and there's no party for me right now. But I will say this, like, I believe that Twitter and other companies can also do what they want because they're free companies.
Yes,
so if Twitter wants to kick me off, they can do it.
Mm-hmm.
Now, in the long run, what happens is Twitter will fail if that's their strategy, because free people want a voice. But if they want to kick anybody off, the president included, that is their right that we should all defend in a free country, that we should all want that, because we should all want our own businesses to be able to have freedom.
Same way if we want to kick somebody out of the scooter shop because we don't like what they're saying to our other customers, we can ask them to leave.
So that scares me, Collin, when I see people that on one side are like, well, we support freedom in these things, and I'm like, well, this can't happen with Twitter. We should have government action. It's thinking, what? You can't even if that's what you think, you definitely can't think that, because you're saying you want freedom. And if you're on the other side and you want a nanny state, then of course, that would make sense. Everything is good until it goes against you. But ultimately, free people with access to information should always want companies to be able to make these choices without us wanting government action. There's something illegal about Twitter saying this is our client and user base, and we're going to have these voices allowed and these voices not. Fine. Eventually someone else can rise up and fill that need.
Create a competing product that's better.
Yeah, do it. And then people will use it if they want it, if the need's there.
From specifically from an investing standpoint too, I think that I'm much in the same line as what you're saying, is like a free market needs to mean a free market, and there's got to be winners, there's got to be losers, and whenever you start censoring speech in any sort, like, so if we go to Elon Musk and we say, look, you can't tweet X, or you can't tweet X about your company, like, the people who are going to end up in the long run getting more hurt by that are the people who are on these Reddit threads who are then no longer allowed to share this information, like the people on Wall Street Bets that were all saying that the access to information is what we all want in the long term, and that more access is better. And I think that anytime you start censoring, even when it is just a CEO or something like that, it trickles down to end up that now you and I can't have this conversation in the studio talking about stocks because of whatever regulation is going on.
And to be clear, there's a lot of stuff Elon can't tweet or say because of SEC regulations. And he's gotten in trouble a few times because he said something that wasn't about his company, that they hadn't officially filed through the right channels. So he said it early. So there are limitations, even as a public company, of things that he can and can't say. My question, this is a crypto question, going back to that, is, and this is actually my biggest problem with Bitcoin. I own a small amount of Bitcoin, not a lot. I've bought and sold it a few times on the rise, so I've been very happy about Bitcoin. Kind of like everything else, though, I'm not a big holder in it. I like ride some momentum, get out. I'm doing the same right now. My real problem with Bitcoin, like, I get blockchain as the peer-to-peer, I get it as taking the middleman out, those concepts. I just don't understand how what we're doing with that is cutting out the market makers, who are the ones making all the money on the back end, Robinhood and all these things, cutting out all the Wall Street folks and cutting out the government. And that's my biggest problem with crypto, with being able to really buy into the thesis of it, is like, I don't see, at least not in my lifetime, I don't see that happening, man. I don't think they're going to let it happen. But what's your take on that? Like, you said you're big into crypto and have been for a while.
Yeah, no, it's So you have to differentiate a little bit because all crypto is not created equal, right? And the purpose of crypto, and for this sake of the conversation, I'm just going to go with the two market cap leaders, which is Bitcoin and Ethereum. Bitcoin and Ethereum are nothing alike. At the bottom of their technology is something called blockchain, which is essentially just a ledger and a way to keep track of information that is virtually unhackable because of the way that it is. It prevents any kind of fraud. It is incredibly secure. If you ever hear anything about people losing money because something got hacked, that was not the blockchain that got hacked, that was the exchange that got hacked. The blockchain itself is incredibly secure, and it's a game changer because to give a quick definition on it, you could use music files for blockchain. One particular application where I think blockchain could be incredibly important in the future is actually in news and official video clips, because with the emergence of deep fakes that we're having, that is becoming a huge issue, right? We've seen the videos, of political leaders specifically coming out. It looks like they are saying something they are not saying. Like, you were looking at the video, you feel like you saw Trump say something or Nancy Pelosi say something or whatever the case is. You cannot tell because it syncs so well with their lips, and it's a machine synthesizing their voice, but it's saying whatever they want them to say, right? That's extremely dangerous, right? So, I mean, if the whoever's the president of whatever country has a video that gets released saying that they're going to bomb some other country and that thing goes viral, well, we've got an international crisis on our hands. So that's an extreme problem. Well, a way that technology can fix that is through its authenticity in some type of blockchain verification that this is the original media file. So there's a lot of different ways that people are working on that. But when I say blockchain, I just wanted to draw that contrast, that I'm not just talking about money here. I'm not just talking about finance. You can do it with anything from music to sound to whatever. That's what blockchain is at a very rudimentary scale. The difference between Bitcoin and Ethereum is that Bitcoin was, if you think about it in terms of this, if Bitcoin is the cars, Ethereum is the roads that it's driving on and all the stop signs and traffic lights. It is the infrastructure. The Bitcoin is the vehicle, so to speak. And that's not even a perfect analogy, but it gets you a little bit of what I'm going to say. So Bitcoin is really just meant to be a currency, the end. It's just meant to be money. And Ethereum is meant to be what they're calling decentralized finance, or short for DeFi. And that is essentially creating user-to-user points of contact to where we can trade, for lack of a better term, information, financial contracts, whatever it needs to be, directly with each other. And it's completely secure, and it cuts out the middleman. It cuts out the banks, cuts out mortgage brokers, cuts out a lot of different things. And there is literally use cases in the future to where if you want to come over and buy my house, we could do it over an app and we could cross out everybody. Now, exactly to your point, that put a lot.
37 middlemen that you just cut
That's
out.
a lot of people.
Swinging.
There's a lot of people. But hey, guess what? I'm getting ready to sell my house in a couple months. We're building a new one. And I have to pay realtors. I have to pay brokers. I have to pay the government. There are so many people that I have to pay to sell what I own, right? And, now I'm not saying that, look, realtors have value for sure, but the only reason, some of these other things I value is because that's the system it was created for. So I do see the government stepping in and protecting that. I do think that they will get in the way with that, and that will slow down adoption. But the reality is it's inevitable, right? People will find a way to get around it. People will find a way to utilize this technology to disrupt the way things are done. And if these industries are smart, they'll adapt. They'll figure out ways to, make things more seamless. I mean, the last closing that I had on my house when I built this one, it was one of the worst experiences of my life. I mean, like, it was the people that we used to brokerage it, like, communication was terrible. I didn't know what I had to pay up front to, like, the day of closing, like, extremely confusing. It was a very frustrating process. So if you bring in something that it's like, hey, you can click a couple buttons and get past that, well, those industries now are going to be forced, because there are fees associated with that, right? Like, it's not going to be completely free. Those industries are going to be forced to adapt or die. So, and again, with the Kevin O'Leary thing, I'm totally fine with that. So that's kind of where, in a very high level nutshell there, what things are looking at. So to me, I would say Bitcoin, think of it as virtual gold. I don't think Bitcoin, due to the limitations on how many there are, will ever become something like a virtual dollar bill that we will go and buy a coffee with. And Elon Musk was asking about this. Could we use it for large value stores? I think just like you don't walk around with a gold bar in your pocket and you're like, here, I'll just chip off this corner here and, buy something with it.
You don't know me like that.
I mean, maybe you do. Maybe you've got really deep, strong pockets.
Yeah, exactly. I mean, look at
think
this
we should
shirt.
bring
Right?
that.
Yeah, it's true. You could. I could be wrong. I'm judging people all wrong. Cargo pants, But that's where Bitcoin is probably going to go. There will probably be a different crypto, or maybe a couple different cryptos that we will use as more of a currency, but Bitcoin will be that gold standard. As of right now, things could definitely change. I do not know. But that's the use case that I see for it.
That's what I've read a lot of.
Yeah.
That's the common.
Ethereum will be
reserve.
the network in which things are being traded hands, essentially. And there are other ones that are like Ethereum that could come up, but that's essentially, like I said, just sticking with those two use cases where I see it. So,
Does everybody here have crypto?
I have some, not a
Some?
lot.
None?
No, none.
I just crossed six figures with it.
Okay.
So,
Wow.
Congratulations.
decent amount.
Small amount. Yeah.
Small amount? Do you have any?
I don't have any.
I mean,
I did have a Robinhood statement where I made 57 cents on it last year.
yes.
1099 misc.
I mean, talk about like the fear of missing out, right? I think this is really happening with crypto. I read an interesting stat that kind of happened when Bitcoin took its next spike up. For everybody who's listening, this is what day is today? We're recording on February 17th.
51.05.
Is that what it's at?
March 1st.
It
is
broke
my
Okay,
birthday.
so
51
right now,
today, which
as
is
we're
big.
recording, Bitcoin is at $52,477.77. Now, I read that in 2000,
Seven figures in, bud.
in
Still got a ways,
2009,
but yeah.
in 2009, $100 would have bought you 1,000 Bitcoins. Right? So if you would have invested $100 into Bitcoin back in 2009, you would have $52 million right now.
Would have been nice.
Like,
Would've been great.
Isn't that, I mean, I don't know, that's insane, right? So these spikes and stuff, I see people like, oh, buy Bitcoin, it's still early, it's still gonna go, to the moon. These terms, to the moon.
That to me is always
You
the
know?
sign that it's not going anywhere. So everyone starts putting the moon
To the moon.
emoji. It's
Like,
yeah.
should-
Definitely not going to
It's
the
gonna
moon now.
crash
Yeah.
hard.
It's gonna crash hard. Okay, like, should people buy a little bit of this at $52,000 or no?
It goes back to like what you're like. We've all touched on the fact of goal-oriented investing is what it is. So like, look, I hold some Dogecoin, right? I think it's hilarious. I understand there's no intrinsic value behind this thing. I love it. I think it's hilarious, and the fact that it's reached even the level it is. So like, I really like that vision, and I hold like I have like 100 coins. I think it's maybe $5 or something like that. It's a joke, right? So if your goal in getting into crypto is because you have had FOMO for the past 11, 12 years now, and now you think at $52,000 Bitcoin is like your next big thing, I would make the argument that your goals are not good. If you are getting into crypto because you believe in all of the things, and even like I'm hearing you talk about this, and I'm even questioning where I'm getting into and stuff, because this sounds like a good long-term vision. So if you're getting into crypto because you believe in the long-term vision that we're moving maybe as 100 years into this sort of like decentralized finance, then I think, yeah, golden. But you have to ask yourself what your goals are, right? It's no different than any other stock. Like if you buy a stock and you just hope to make money off of it, then I would say that's not a great investment. But if you believe in the long-term vision of crypto, then
I mean,
by all means.
not to plug my own podcast here, but I did an episode just recently because I get this question all the time of whether or not you should buy into Bitcoin. And I go through 4 questions that you have to ask yourself, and you have to answer yes to every single one of them in order to get to the final level and be able to get the endorsement, right? But in general, and be interested to hear James's opinion on this, I look at it from the perspective and I go, if you are in a position, if your financial foundation is secure, you have your 6 months minimum, emergency fund, ready to go. You have other investments, you're contributing to a 401k, other, proven set investment things that should not be your first investment, right? for me, I look at it and I say if 10% of your investable income every month, I think should be for people who are younger, should be put into speculative investments, whatever that ends up being. So to me, Bitcoin, Ethereum, very speculative investments. So if you have $100 to invest every month, then I would say take $10 of that 100, and if you want to put it into crypto and you've met all those other criteria, then yeah, sure. That's kind of where I would see to put it. But, I'm interested to hear
Because you're basically saying it's safe to light it on fire in the middle of the table.
Yeah, you just have to be prepared.
I can lose this entire amount.
Yes, it is gambling, but it is also something that it is not a company, right? Like this, we're not betting on Amazon here. This is a currency. This is a technology that we're betting on, and it is completely controlled by what people say it's going to be worth. So that's kind of where I just kind of lean with it, is 10% of investable income. I wouldn't do more than that. At that point, you're really setting yourself up to be in a bad position, and hold it. If you're going to do it, you need to treat it like other investments. Like, buy it and forget about it. Like, don't even look at it. It trades 24/7. I tried to trade it a little bit very early on, went insane, because guess what? China and Asia, they go crazy on this stuff. So in the middle of the night when I'm sleeping, it could drop 30%. So anyway, but what James, what do you think about the 10%? I'm curious.
Yeah, there's so much here. There's so much depth into this, but I think in general, let's take a second to talk about like a financial planning oriented thing, because we've talked a lot about this indirectly. There's a couple things going on. One, anyone who starts a business becomes aware of this at some point in time, right? Starting a business is all risk, essentially, in the beginning. You're risking a paycheck. You're risking a bunch of things. Yeah. But then eventually, if you make it past the early stages, you get to the middle stages and the late stages of your business, you probably have amassed some wealth. At that point in time, you could actually, and view your life as a foundation. You have a foundation and a house built, and it's probably pretty solid if you've been wise. Now you can go outside your house and explore the more adventurous sides of things. Let's call this speculation. So the to the moon, and you mentioned, Collin, which is a big phrase, that's not a new phrase. Like, moonshots have been a thing that venture capitalists have talked about forever. And in fact, it goes much, much back, further much than that. But in general, when you reach a point of stable wealth, let's call it, that's typically when you start taking your moonshots, which tends to be 10% or less of your portfolio. Now, something reverse happens in truth as well. When you're young, 18 to 25, $100 doesn't feel like a lot of money, even if it's the only amount of money you have. You mentioned your bar money, right? Well, I don't go to the bar. Your life is not over when that happens. At my firm, we tend to deal with clients that have more than $1 million. And I can tell you that when you start to amass real wealth, how you view your wealth is way different. Yes. The swings are different. Because now, if your $1 million goes down 30%, you just lost 300 grand. And although 30% is still 30%, if he loses his Dogecoin and it goes down 30%, okay, great. Now he's got $4.
Yeah, right.
But
$3.90.
He's at like $300,000, right? So there's a lot of things that go on when you talk about kind of what this looks like. But when it comes to crypto, I think the answer to the original question is, should you invest in it? If you're a trader, consider investing in it. But if you're a trader, have a strategy. So again, I talked a lot about my human behavior portfolio, right? So for me, I have an algorithm that we use. An algorithm is so misunderstood nowadays. All an algorithm is somebody has a set of rules they used to trade with, and they just put it into an algorithm so it can automate their buying signals. That's it. I could do it myself manually and waste 20 minutes, or I could have a computer do it for me. That's every algorithm that pretty much exists, right? So step one is just a set of rules. It's not some magical wizard that's figuring out what to do.
Really?
And two,
damn, I thought that's what it was.
I know, right? And two,
so less cool
we can use that. I can use that on crypto, but the bottom line is Tulip Mania. I'm going to go back to it. Was Tulip Mania a good buy at $100,000? Sure was, because it went up to $750,000. So if you had a system that you feel like is going to get you out at anything greater than $100,000, then fine, do it. The odds of that are small. But what I'm saying is this, people ask that question saying, what's the future value of Bitcoin? Well, the scary reality is Bitcoin is not gold. Gold has tons of value beyond just being a currency. Gold is used in all sorts of things. Manufacturing processes, it's used in all sorts of things you probably have no idea gold is used in. Just Google it. Uses for gold. It's not just something that sits in your freezer in ice cubes if you're afraid of the world ending. Silver has even more uses. There's a reason why these metals have uses. Bitcoin has no use of any kind.
I have to push back on you, though.
Right? Hold on.
Okay, I will.
Bitcoin has no use of any kind right now other than, hey, I think it's worth more in the future, so I'll buy it and sell it to this guy, right? I think blockchain has tremendous use, and I think the idea of a decentralized currency is remarkable. I love it. Again, I'm about the freedom. I don't like fiat currencies. I don't like governments printing money. That idea is great, but Bitcoin, it's limited in transaction volume. It's really hard to exchange, as you mentioned. How Bitcoin holds a lot of value is going to ask yourself this one question. Gold as a currency, go look at the chart on gold as a currency, and you tell me what gold is worth and how much it's skyrocketed to the moon. Gold's been a currency for 1,000 or 2,000 years. There's no case for gold being worth like $1 jillion. It stays with
grind.
Currency by definition is stability. So the argument I'm sure that you might make is that, well, Bitcoin's going to reach $500,000 and become stable. To which I would say, what value does Bitcoin have? And why wouldn't some other coin potentially come in that's much easier to transact and much faster that just crashes Bitcoin? I don't know. I don't have the answers to these questions. But I think, like you mentioned, if you're getting into all these things, acknowledge that you nor anyone else have any idea what's happening with any crypto. And ideally, yes, limit yourself to some amount of your money. And if you're young and you're single, and it doesn't matter if you lose all your money, go for the moon all the time. But eventually, when you get a stable job,
Rocket Man.
Like jumping on a
right. Just launch, But when you get a stable job, you need to start saving 10% of your gross income in actual long-term investing, so that you can provide for yourself in the future. And anything above that, you can do whatever you want with. But make sure that you get that down seriously. Don't gamble with your future down the road. Again, if you're 20, you think, my future is so far away. It's not that far away, especially if you start losing all your money trading all the time. And then perhaps lastly, as a number on trading, he's trading and he's talked about it. This is very well studied. 20% of traders make a positive return. That sounds pretty good. 3% make enough return to make more than minimum wage. 3% of day traders when they trade for more than a year. It's not 10 years, not 20 years, 1 year. So he's killing it, right? So 1% make more than $300 a week. Do the math on that. You're like a regular job at best, right? Part-time. And 0.1% are profitable at that job. And if they trade longer than 10 years, they lose everything. That's the harsh reality on day trading. So if you think you're going to be the next great day trader, the best day traders you hear about, they all got out. They all stopped day trading. They made a ton of money and they got out.
They market themselves and
then there you go.
Yeah.
And so that takes me all the way back to Bitcoin. If you bought a tulip at $220,000 and you sold it at $700,000, that was a great move.
Gosh, I
and
hope
the whole market was
$750,000.
Right? The whole market was stupid. So you can make money in things that aren't actually good long-term markets. So I'm just encapsulating all of these things. You could think that Bitcoin's not going to last, and you could also make a ton of money on it.
That's a trade versus an investment.
Exactly.
Too.
Correct.
So I'm trading Bitcoin. I'm trading options. I actually am very remiss. I have almost no investments. I have my Roth IRA. The small amount of small return. I need to actually up that side of my things. Most of my stuff is trading. And I think that that's an important distinction for people to make too. Trading is a completely different thing than investing.
Absolutely.
And I would argue, personally, I think investing is actually more important. I just happen to be heavier on trading in my particular.
It's not as much fun though. It's definitely not as much fun.
It'll keep you up at night.
It's more fun later. It's more fun later in life when you actually get to play with that money.
Exactly.
Because when you own that $700,000 tulip and it goes crashing down, trust me, it's not a fun feeling.
Yeah.
I do want to push back on the Bitcoin thing real quick, because and some of this is very present day, let's put it this way, because Bitcoin can I'm actually counting on Bitcoin being replaced eventually, to be honest with you. But for the time being, it's the brand, right? It's the first. It's the MySpace of social media, right? Or of cryptocurrency. Eventually, I do think a Facebook and a TikTok and an Instagram will come along and kind of replace it, but it's setting the foundation for what will eventually be what I think is very important, because this is the value that cryptocurrency, I guess in general, does have, right? And one that is like a Bitcoin that is dedicated to be a currency. And that's the fact that it is totally decided by the free market. Now, yes, it is unstable right now. Probably need about a $5 trillion market cap to be able to be considered. And I think at that point, I don't remember, somewhere around 250,000 to 300,000 of Bitcoin at that point to reach that area. So about 5 trillion is when you can't have what they call whales, which are people who own large wallets. Fun fact, the U.S. government has one of the largest wallets in Bitcoin. A lot of people don't realize that. But once you get to that point where it is more stable, I guess you could say, look at Venezuela, right? Their currency has less value than toilet paper. And I mean that in the most legitimate of, in the most realistic of things. Like if you could give somebody a roll of 2-ply, it's worth more than $1,000 bill over there. So that is when you have countries, Africa, certain places in Africa, to where it's incredibly unstable over there. The governments, the average person is 35 years old or 30 years old or something like that, incredibly young because they're still dying at very young ages. You have Venezuela's where very corrupt governments are taking. The two main things in Venezuela, just so people know, two main exports: oil and gold. Why in the world is their currency worth nothing, right? Corrupt governments. That's the problem. People ruined it, right? So to be able to remove all of that, there is a safety that we've never really been able to have before, because as long as you have electricity and a network, then you have the capabilities to be able to bypass everything and still be able to operate and manage. So that's where I would say the intrinsic value is coming from. And in a day and age to where global markets are just complicating, they used to say, who cares about the price of tea in China, right? Well, now it doesn't really matter what you do. You have to care about the price of tea in China because it almost has an effect on any global market. So things are becoming, with globalization, so complicated. The simplicity of just what do we all agree this is worth, this computer code essentially, that has intrinsic value, I think, nowadays. Is it useful like gold or silver, which we can put in phones or anything else? No, absolutely not. But that's where I would just be, my only argument is right now, Bitcoin is that currency. That's that safety layer from your government's currency, fiat currency crashing. And in the future, I do think it could be something else. But for right now, that's the horse that we're riding in on.
Right, and that's the trading versus investing, right? If someone were to ask me, should I invest in Bitcoin and not look at it for 30 years? No, don't do that. The odds are great that Bitcoin goes away and maybe some other coin, like we're talking about, does it. But Bitcoin, if you just look at it, it's hard to think that Bitcoin becomes the future currency or the future gold.
It swings too much. How could you possibly?
Yeah, and just in general, it's
got technological limitations.
Yes,
as well.
That's the real kicker. Is you open the hood and say it really can't ever get there. So, but that's fine because it's 1.0. It's version 1.0, and
exactly.
Version 4 or 5.0 goes by, and someone creates a coin that might work. And the idea, and this is what we're getting at, right? If I could invest directly into the idea of decentralized currency, and there was a clear, obvious choice for that, I would do it. But right now there isn't one. That's what we're trying to say. It's a frontier market. That idea is amazing. Blockchain is definitely going to change how banks and people handle transactions if governments allow it to happen at some point. Those are big questions. But yeah, if you're thinking Bitcoin's an investment where you're going to put your money and not look at it for 40 years, that's different. And then this ties everything kind of nicely together. We talked about owning individual stocks versus owning an index fund. If you put your money in the S&P 500, that's actually an ever-changing investment. Mm-hmm. So you're investing in the ingenuity of people and companies into the future, but you are not investing in one company or one idea. And the S&P 500 is not the same 500 companies 20 years from now that it is right now.
Right.
Tesla got added this year.
Correct. And that's why it's so dynamic. If you hold one company, you are at the whim of that one company. If it fails, you fail. And that's what we talked about with individual stock ownership, et cetera. So when people say, get an investment and don't look at it, oftentimes that gets applied to things that are not things that you should not be looking at. And if you want to own Bitcoin, you should be looking at it, because there's a certain point where you are going to need to exit that position, because in all likelihood, at some point, we don't know when, it's probably not going to be the flagship bearer forever. And that's kind of what we're saying. Some people think that the Winklevoss twins are all in. They've made billions of dollars off of it, right? Yep. But at some point, they'll probably exit too, or they'll be sad. So there's a lot in here. But yes, trading versus investing might be the best thing we've kind of granulized today to really cement the differences in your mind.
It's called unrealized profit for a reason. Because until you pull it out and turn it into cash or whatever your currency is, it is unrealized.
Or a material good,
Well, I
real
mean, and
estate or whatever.
I was very much surprised by the fact that I didn't realize how many different cryptocurrencies there were.
No, there's so many.
Oh,
You know,
there's
like you hear like everybody
three
talking
more,
about
yeah.
Bitcoin and stuff, and so like I was like, all right, let me download this Coinbase or whatever it is, and is that what it's called?
Yeah.
Coinbase.
And just quick plug for that. I'm going to let you finish what you're saying. If you are trading crypto at all, you need to use Coinbase because it's the only one that's American based, that they only allow cryptocurrencies that have a legitimate use case, that they have a lot of specific criteria. That's why you can't get Dogecoin on there. That's why you can't get all these other ones
longer
because
get XRP.
you can't get XRP because they broke some
was
rules,
tough,
and that was tough for a lot of people. But there's legitimate reasons behind it because XRP was trying to replace Bitcoin, but there's some flaws in their operating model that they're going to have to rectify. So if you do want to do it, the safest way to do it is Coinbase right now. Don't Binance and all these other ones.
Yeah, but their
they're
fees,
scary.
so that's the thing. It's so interesting that you say that because like I get in there and I like read these chats and stuff like that, and a lot of people are like, oh dude, Coinbase is like for the beginners, the fees are outrageous, get the other ones, right? Like that's
Yep.
a lot of what's happening in the chat, but you're saying that's like not
Some of these other ones like
safe.
Binance, you know, for instance, is a very popular one that you can do. They had to split off because they were hosted out of China. Well, China shut down some exchanges, and some of the exchanges in China got hacked, and people lost their entire wallets and all their money.
They got hacked last week and had some vulgar stuff.
Oh, so
Replaced a bunch
okay, so
of
there you go. So
vulgar, like they had bad words for the coin.
Oh,
names.
really? Okay.
So it was like, whoa, that
So-
was, to me, that was an eye opener because it's like, well, they just got
damn.
hacked.
So that's the thing. Coinbase is American based, American hosted, the most secure, and they have the best criteria out there right now. And you better believe I'll be investing in that IPO whenever it comes.
And then also they provide a 1099 MISC, so it's on the
Yes.
up and up with your taxes. So if you're trying to avoid all that and do things shady like, you're gonna go Binance, the VPN, all those things. But I don't recommend that. I think
Yep.
staying on the up and up gets you a lot better because when you do get audited and they say, what's this giant cash transfer from Binance? They know what the giant cash transfer from Binance is. So if you either pay the taxes now on your Coinbase account or you'll pay them when they come get you along with some fines.
Okay. Can I jump back a little bit into like, you know, where you're going with Bitcoin and what Ethereum?
Mm-hmm.
Okay, and how you're saying one's like the car, one's like the roads and stuff. Like, I hope I'm doing this on behalf of the audience and not sounding like the idiot in the room, which I'm perfectly okay with. But I hear all these terms like needing gas and mining and like I'm like what the hell are these people talking about?
Yeah.
Like, you know,
a lot of those terms are just very specific to whatever the specific crypto is. So it's in relation to that, like needing gas. You wouldn't say that on something like Bitcoin, but then mining, it's different. So mining is probably the most common one people will run across. Just as to give you an example, there's only, I think it's 88 million Bitcoin that will ever be available. I think as of right now, I don't remember the exact number. It's like 78 million or, it's 80, 85% or something like that.
Supplies reducing.
Currently
Available
released.
lifetime supplies.
Right, and it's going to take like 100 years before it's completely released. Well, one of the things is, how do we get more Bitcoin? Bitcoin is unlocked by doing very complex mathematical problems. So when people have mining machines, and this is something to where, believe it or not, it's an environmental issue, because what is happening is that the computing power that we have right now to do these mathematical problems, and they get more complex as we get closer, to the final amount, right? So these mathematical problems is the key to unlock one Bitcoin or a portion of a Bitcoin. So people will get these computers and they will run them night and day, and it will get them little bits of Bitcoin here and there, and it will mine it for them. So just like in the little terms, you think of somebody like mining for iron ore or whatever the case is, that's what it's doing, but with computer code. Well, the electricity, the most recent statistic I saw was last year, the electricity that is being used on a 24/7 basis to mine Bitcoin right now could power the entire country of Ireland. And that was last year, and it's got more complex since then, so it's even greater. So just to mine Bitcoin, we could be powering all of Ireland right now. So that is where another problem with Bitcoin comes in later on of how sustainable is it for us to even do that. Now, there's a lot of things that could change that. You have quantum computing that's coming down the road that will up the computing power of computers by thousands of degrees compared to what we're doing now. It's unbelievable. It's game-changing technology, but it will make whoever gets the first quantum computer will essentially nullify every security measure on every existing platform that we have right now. It's unbelievable. So stuff like that could change it, right? There's a lot of crazy technology stuff that's coming down the road, but when they're talking about things like mining, that's what they're referring to, is the mathematical computations to unlock the cryptocurrency. Sorry if that was a lot.
Do you get this stuff?
I'm learning.
There's whole warehouse.
Like, why is the Bitcoin even locked up to begin with?
So there's
It's just like the Federal
What are the
Reserve, right?
mathematical-
We don't print all the money we could ever print. Yeah. We release cash, and that's why we control inflation slowly.
Okay.
Right? We don't just say,
usually,
hey,
not this year.
usually. It depends on who's in charge.
right now we've been
I
printing
guess
money.
I've just been trying to like
That's how
wrap
Mr.
my head
Hamilton
around, like,
intended it, I think.
I don't know. I've always tried to wrap my head around that part. There's something there that's still like I'm not understanding. Like I hear like everything that you just said, and I'm like, yeah.
Well,
like,
isn't it completing tasks on the blockchain? Is that what it is? The actual mining?
I don't know. I honestly don't
That was
know
my
if it's
understanding, but
completing
I
the
don't
task
know.
on the blockchain
Or contributing to the blockchain?
maybe contributing to it. I wouldn't know the exact vernacular. I'm not that technical with it, but that's roughly the direction that we're going with.
Yeah, there's a ledger of every coin mined
Yeah.
Yes.
on
yeah.
blockchain.
But
So you can
I
see
think
it
that's
all.
what the act of mining is, though, isn't
Yeah.
it? Is contributing because that's
Yeah.
the way to get every.
It's unlocked
That's the
and
way to create
recorded
the
on the ledger.
blockchain.
Right,
Yes.
right, and that was like the idea. So like gold, issues with gold are right. Countries once upon a time tried to accumulate all this gold. Fort Knox here in America, for example, to try to control the supply, manipulate money. So again, this is not a new thing.
No, it's-
Bitcoin's elegant solution to that was, as you mentioned, was to slowly release it, but also to just make it something that you could not, by definition, actually just gather up entirely on your own. Nobody could just go get all the Bitcoin supply, and blockchain shows you who did it. So if somebody tried to do something that wasn't up to snuff, you would know immediately. Hey, look at that. That's really weird. Which is amazing, obviously.
Yeah,
for a lot
the
of reasons.
transparency is incredible.
Yeah.
I mean, can you imagine a world where we required all politicians to put their investments on a blockchain and we could know exactly who is investing in what? That would be pretty interesting.
But there's things I don't get, Colin. Like, I feel like I'm living in some weird sci-fi movie right now.
hey, me too, man. Like
It's weird, man. Like, I read a week ago that a piece of digital land, virtual land, sold for $1.6 million.
What does that mean?
You can read this. Google, it's on something like Axie, AXIE Games. I don't understand it. I read the article 3 times. Someone named Flying Falcon purchased the $1.6 million plot of virtual land. And
I don't
was
think
very,
that's their Christian name.
Yeah, very excited. But you read the article and you're just thinking, this is crazy. Like this is if a movie had this, it's usernames and virtual land plots created on games and digital art. Non-real things you can touch, non-fungible tokens. You heard about these things?
Yep.
Selling for hundreds of thousands of dollars, like a 5-second video of something that's original and authentic is. I mean, it's hard. It really is hard to like keep up with all the things that are happening, and it's either going to be like 30 years from now, the whole world is like this, and we're a bunch of people sitting around here saying maybe he gets it, and we're all like, dude, I don't know what world we live in anymore. I like walk outside and I see real things, and everyone else is, stuck somewhere else, but. It's really crazy, but I think at the end of the day, humans derive value from all sorts of things, right? Mm-hmm. That's the key. And what gives something value is because people think it's valuable.
Perception.
And that's an important thing to note is although things are tangible, we can touch them. Plenty of intangible things have value that people will pay for. So don't get too stuck thinking, I don't get it, it's not worth value. But also, it's okay to admit that like I don't really understand all of what the heck is going on.
Yeah,
that's why I'm just like willing to put myself out there and be like, I'm okay to be the idiot in the room because I've really just started like trying to dive into more of this and just learning, especially with I don't know, all the talk and all the stuff that's happened with Robinhood and everything else over the last couple of months here. It's just been like, all right, like I'm actually like I'm interested, but let me try to educate myself as much as I can, and that's why I like even doing this, at the risk of sounding like a fool and being like, why are the coins even locked up? I don't understand. Why is there only 88 million of them or whatever you said? Like why? I'm like why? Like I don't understand, and so just
And who's the
audience,
founder
I'm
of
sorry.
Bitcoin? Who invented it?
Yeah, I don't know.
Satoshi.
No one can know who this person is. Which
We don't
is
even know if it's
gotta be
a
the
person or
greatest
if it's a group.
mystery
It's awesome.
that there is. Like,
But then, like, I even read,
who is this?
dude, I even read something like some guy, like, and I didn't understand this. Some guy had his Bitcoin like locked up somewhere. I didn't really understand what that, because
On
I'm
hard
like,
drive.
here
It was
I
because
am,
digital
here I am,
wallet.
like, so here I am, like, trading
it on a
Bitcoin.
hard
I'm
wallet.
like, I don't really understand what this means. This guy has it locked up, and it's like he's got like 2 more password attempts before he loses it all, or something. I'm like, what does that even mean? I don't, you know?
Yeah, that's just part of the security, right? And we have, it's gotten better as time has gone on, and there's a lot of easier ways to get access to it. But basically, he had it locked on a hard drive. So if you think the hard drive has his digital wallet on there, he got it. He doesn't remember his password. He has 2 chances to get back in. He's locked out forever. I think it was 280 million at the existing value. So don't lose that wallet, everyone.
He's really going to want that quantum computer. Huh?
Yeah, he's really going to want it.
Save those 2 chances.
Yeah.
I was reading something, I think it was last week or the week before, but after the whole Tesla, Bitcoin, and it came that in a month of holding Bitcoin, they've made more money than they have in the 14 years of selling cars. In
Tesla,
1
when
month
they
of
bought that.
Tesla.
They bought
one month of
$1.5
holding
Profit.
million. How many?
$1.5 billion.
$1.5
Yeah.
billion dollars of.
Yeah, that they profited more from
Tesla
holding
made
that for a month. Yeah.
$725 million last year, and their Bitcoin investment has already made them $750 million.
Something like that. Yeah.
So
I just real quick to put it.
I wish I had $1.5 billion to just go buy
on
some
the-
Bitcoin, you know?
Think about
Should have bought it back in 2009, Elon.
Really what we're talking about, again, just goes to the point of value, right? Like maybe something a little bit easier to understand than a digital island, like you said, is a URL, right? How much if you own Google.com, how much is Google.com worth, right? There's all these different things. Anything.com nowadays is harder and harder to get because there's not that much. Well, what is that? That's digital real estate. There's value in it because it'll help from a search functionality perspective to a degree, but there's also the factor of like, well, don't you just feel like when something says .com versus .co, it's more legitimate? It's not. But we feel that way, and therefore there's more value in a .com right now than a .co. Yeah. It's perception. What about the Pokemon cards right now? They've got holographic Charizards that are, grade 10 or whatever. PSA 10 and all these other things I've been reading about them. They're going for $300,000 or more. It's a Pokemon card. I probably traded with that thing. I loved Charizard when I was a kid. So, who knows? But why is that? It's just supply and demand and what people want. Like, who cares about, somebody may not care about the Mona Lisa, even though we consider it priceless. Well, why do we consider that? There's all these things that go into it, but that's what's really becoming interesting on the digital stage is that we are starting now to see that people are taking this digital intellectual property and we're starting to see crazy valuations for it. If you look at performing assets, physical art, has actually outperformed a lot of traditional investments over the past 10 years. So just paintings of local artists and different things like that, it always helps if they die because they can't make more. So sucks to be an artist. Your stuff doesn't really become worth much until you're dead. But, that's what we're starting to see is we are now creeping into the world of digital investing, and it is just a classic supply and demand. And what will somebody pay for it? That's what it's worth. It's crazy. It's a fun time. I love it.
That's one way to describe it. Mike, you have anything over there, man?
Yeah, I wanted to ask, back on the Robinhood topic, is there any legitimate recourse for anybody that feels like you used the word fraud. And there are class action lawsuits that are mounting against it. Is there any legitimate recourse, and what might that look like?
$10 check once you sign your name on the class action lawsuit. Yeah.
Right. Is that?
That's like most other class action lawsuits. That's what I'm not an expert, right? But I can't imagine that any of the probably millions of people on Robinhood that lost money or were affected by this are in a position to really take a stand individually against these sort of people.
Right.
So the class action, $10.
They need to rebrand to the Sheriff of Nottingham, in my opinion, because unfortunately,
that would be epic, actually.
Look, I hate to
embraced it.
I hate to say it. I hate to say it, but they're going to win. They're absolutely going to win.
Yeah.
Their IPO is going to go nuts.
Their IPO is going to go nuts, even if they lost half of the accounts that have signed up just this year, they've still 3x'd, 4x'd their user base. And not enough people are going to care because they've got a fancy, like I use E-Trade. E-Trade is great. One thing E-Trade sucks with is their user interface, right? Robinhood's is clean, it feels trendy, it's cool, like all this
Simple,
other stuff.
too.
It's simple.
It's very simple.
E-Trade
You can
has
buy
a
part of a
ton
share.
of great tools, great analyst research, all this other stuff, but it's clunky. It's not sexy. And just for that reason alone, Robinhood will keep the majority of their user base and end up winning this. I hate to say it, but it's true.
Yeah, none of us are attorneys here, but from what I understand, there's nothing that anyone can do criminally against Robinhood because they didn't do anything criminally.
Right.
That's probably a good place to start.
That's
like
true.
as frustrated as people are, they did not actually do anything criminally. What's a good definition of doing something criminal? Harming someone's property. Like if I punch you in the face, that can be criminal. If I steal your stuff, that can be criminal. By Robinhood limiting people's access, they didn't take any of the existing property they had. That would have been criminal. They didn't take money out of accounts. They didn't do those kind of things. Even the pre-existing market orders, that's like you put a to-go order into your restaurant and then they call you back 5 minutes later and say, ha, just kidding, we're closing early.
We're out of wings.
Right? They can do
great
that.
point.
And so that's frustrating and it's not great business, but that's where the civil side comes in, which we're talking about now, is you can file whatever you want. I don't really know that they have a great case against it because, look, brokerage firms, people don't understand this either. They are a middleman. They all purchase the shares first. They have an account on their own, which allows them to move the money quickly. Everybody has this, even the huge ones like Charles Schwab, Fidelity. So ultimately, if they limit your trading access, that's within their rights to do so. Is it good business? Probably not. Does it look really bad based upon who their main investors were? Yes. Are they going to be able to win a civil suit? I'm not a lawyer. I don't know. Even if they had all the money in the world, I don't know that they would. It's hard for them to make a really good case that what they did was actually harmful to existing property, besides just limiting some access temporarily, which, that's tricky. And again, you could have taken your stuff out and gone somewhere else and invested within that 2-day window. Nothing was stopping you. So that would be something they could have done. You can't take your money out. Okay, now we got issues. So I don't know. I'm not an attorney, but I think that's going to be really tricky for other reasons beyond just the fact that the little guys don't have money.
The other thing that I think people forget, and just because it's been such a new thing, like with the Game Stop and AMC thing, that there's been such a huge influx, and even the pandemic, like the last year, a lot of people have gotten into investing. But this is not the first time that Robinhood has had issues in this capacity or something. At the beginning of the pandemic last year, before people were really into it, but there was like the triple circuit breaker day. There was like one day where it's literally just we're to the core of the earth. SPY was going, on a mission for the core. And for the first probably three.
Good day to buy, actually.
Yeah, no, for sure. But for the first 3 hours of the day or something, like Robinhood was just not functional. So you can imagine the amount of people trying to put in orders and everything. And then, the year before this happened too. So pretty much once a year, if you're really watching Robinhood, something like this happens.
It's not just Robinhood. I'm on TD Ameritrade, and the morning, the real crazy morning of GameStop, nothing worked. It cost me thousands, actually, because I actually still had a good day. I wasn't in GameStop, but I was trying to sell positions at the open that I had swung overnight, and I could not execute an order. The whole app was lagging, and I put in a customer service chat thing, and they're like, yes, everything's bogged down this morning. And later on, as I kind of saw what was developing with GameStop, I just don't believe that it was just like the servers were overwhelmed. I'm positive at some level somebody was accidentally slowing some servers down. Obviously, and there's no way to prove that. I'm sure they covered it up well, but anytime, I've noticed it too, anytime there's crazy, overwhelming volatility, the market makers do weird stuff in the background. They've always done weird stuff. I think you said earlier, there's always been market manipulation. The GameStop phenomenon was just that it was retail traders manipulating instead of
isn't that the problem,
the other
though?
side.
That
was totally the problem.
They'll step in and interfere with the retail manipulation, but they don't seem to step in whenever it's being manipulated the other way.
Yeah, but that doesn't work anywhere in society. When is the government ever hey, little guys, let me help you out? No, same with the bailouts, everything else. So for me, it's you have to understand the game you're playing.
Yes.
The game you're playing is rigged against you. So that's also why it's important to take your profits off the table quickly. So when you have a great day, you don't go, oh, what if this goes higher if you're trading? If you're investing, that's a different story. You go, okay, maybe I take some off, maybe I leave it. But if you're trading, you go, hey, I just had a great day. I'm taking it and running, and I'm not going to worry about where it went.
And just don't even look the rest of the week. honestly, it's like if you have a great Tuesday, a great Wednesday, just you're gonna make bad decisions.
Don't look at that ticker again for sure.
Yeah, for sure.
Because all you'll do is be like, I should have, and that's the worst thing you can possibly
And
say.
historically, to that point again, like I love what Thomas Sowell says, that there's only trade-offs. There's no perfect answer when you talk about systems. But like we talked about, the system is rigged against us, et cetera, et cetera. Oftentimes people advocate for more socialism or more government intervention, but that's precisely the wrong medicine.
Right.
That just makes it worse. Like if you think that advocating for a bigger government is going to make things more fair, history will tell you a decidedly different answer.
Yes.
You should be advocating for more freedom, and therefore what would happen? Well, these too big to fail, a term that governments make up, it's not true in the free market, companies should fail. And what happens if they don't is they have a huge moral hazard, right? I work in the investment world, and to go back to the 08 crisis, what happened was companies like Goldman Sachs, on one hand, would sell their clients one thing, and on the other hand, they'd buy different stuff. Now, you can do that if you want. They should have gone bankrupt. The reason they didn't was because they got backstopped by the government, because the government said, you know what, this junk's too big to fail. So what happens is, we should accept short-term pain, sometimes significant pain, to root out bad ideas, bad actors, bad situations. Instead, we're in a country where we backstop the people that did not handle things correctly. There were plenty of banks that handled things really well in 07, 08, 09. They should be the big banks now, but they're not, because we protected all the ones who did stupid stuff. The airlines are notorious for this stuff. It's one of the reasons why they don't make quick changes. So I agree with the sentiment that, like, yeah, in any place you're in, that the little guy with less influence is going to have a harder time. But you can become the big guy in a country that's more free, because you do have a lot more freedom and choice to amass wealth, do things, become an influencer. So I want to make that point to the side. There's a lot of, I think, like, well-intentioned but incorrectly placed frustration at the feet of, like, if we just have more rules and more government and more people overseeing things, it'll get better. But again, history teaches us hard lessons there. That may feel right, but that's not what typically winds up being right if we're frustrated, with those things.
I don't need the people who came up with our existing educational system and the DMV to be in charge of the free market.
Yeah, right.
Well, the other thing is, so from the government's perspective, is in their best interest to protect us retail traders who are mostly losing money and writing it off on our taxes, as the statistics showed before, or Goldman Sachs, who I'm sure has quite a tax bill, and all their portfolio managers, everybody else has quite big tax bills. So even just from a self-interest standpoint, I feel like it's kind of cut and dry who the government would want to protect. Not even from a nefarious standpoint, just from hey, we need to protect our income here. Let's protect our cash cow versus the people can go, I'm not saying that's right. Clearly that's not a great thing, but I think it's also reality.
Yeah. That's well said. Actually, a lot of times, we dream up these really nefarious conspiracy theory stories that people are elegantly doing. People are not that cohesively wise. It's really hard to do really elaborate schemes that no one finds out about. It's much more of what you just said. It's protecting your own interest. Why do politicians, vote for certain things? Well, oftentimes because their biggest donors are telling them to vote for those things. It's not because they cooked up some 5-year plan to take over the world. It's really more of this person keeps me in office and I want to stay in office because I wind up getting a salary and take care of my family to do it. And that's one of the reasons why the free market does work. Another big philosophical takeaway here is Elon Musk didn't get rich by taking money out of your pocket. Jeff Bezos did not get rich by taking money out of your pocket. It's not a zero-sum game. There's not a fixed amount of wealth that they're stealing from you. They created something that actually added new wealth to our society. And that's really important too, because a lot of times people look at it and think, well, if Jeff Bezos got that rich, he stole it from someone else. Not in a free country.
Right.
Not in a free market, especially. That's definitely true if you look at Russia. Russia became a free country in the 80s, right? And they had all these oligarchs that came through and their oil czars. That was the last-ditch political favors of the Soviet Union. Hey, here you go. You're going to run all the oil industry now. That junk was incredibly fraudulent. But that's not happening again in a free market. So just good to keep in mind. There's a lot of proper frustration out there, but I am concerned to a certain extent that it's going to get directed into some really poor directions we don't want to go in. That's going to make things potentially much worse, down the road. And people are going to think, oh my gosh, what was I thinking? I had the right idea, maybe the wrong execution.
That was my first thought was, they're going to regulate it more.
It's like they say, capitalism is the worst government system out there, outside of all the other ones. It's not perfect. We got stuff to do, but I know we're wrapping up here. But one thing I would just love somebody told me this, and it's proven to be one of my favorite quotes, because it just continues to become more and more true in more and more situations when I think about it. And that is, the answer to all your questions is money. Let that one sit. It's going to hit you multiple times over the head over the next week. I promise you. The answer to all your questions is money.
What if I have a question about that?
It's probably money.
We just hit the 2-hour mark. I know we got to wrap up. So why don't we go around the table and say where our audience can connect with each of you, maybe pick your brain, ask you a question, ask about something they heard.
Sure. Well, first of all, I'm not a financial advisor, so if you're going to throw financial advice my way, leave it at the door. I have nothing to give outside of this podcast. But make sure you check us out. Like I said, Alex Quintero from GNV Entertainment and Empower Media. So it's GNV Entertainment on Instagram and Empower Media GNV on Instagram as well. Coming out with a lot of cool things over the next couple months, so make sure you guys check it out.
Awesome.
Sweet. Yeah, I'm James D. Virgilio. If you Google my last name and get it even remotely close, nowadays you'll find me. You could be way wrong spelling it. It'll still pop up. You can find my firm's website, cddwealth.com. You can send me an email, which is there on the website. I try not to use Twitter, Insta, and other stuff to just keep my life nice and peaceful and mentally free. So hit me up the old school way with email.
Nice.
That's
the
not
best
the
way
old
to go.
school way. I love it.
If you Google my name, you might get a little bit of me, but you're probably going to get, I think it's an old Steelers linebacker who died a few years ago. So, but outside of that, you can get me www.everything.money. No .com on that one, so don't worry about it. It's just everything.money. And all my contact information's on there, or you can hook up with me, Stephen with a PH, on LinkedIn, all the other social medias. I'm out there.
Right on.
And the Stephen Courson show, where you that's what you talk about is
and
money.
the Stephen Courson show, absolutely. It's available anywhere you can download a podcast. Go check it out. Just did episode 19 the other day. Super excited. It's been a ton of fun, and got a lot of great feedback on it. And got there big plans in the future for a lot more different types of content. I do a lot of stuff on, it's not just traditional trading money or different things like that. It's financial foundation, it's time management, it's a lot of other things. It's more about wealth than it is about getting rich.
Awesome.
Cool. I'm going to check that out. That sounds good. You can find me. I am the Cheerful Sound Man on Instagram, or Bunt Backline, bunt like in baseball.
Yeah.
That's about it. I'm also not someone you should be asking financial advice from. Really, I geek out. It's a hobby. But if you want production advice, or like how to make your event or building look better, or your corporate meeting or concert, I'm your man.
Yeah.
Not so much for crypto advice.
That's what's so great is I really, I wanted to get people who just do this on the day as part of their fun or just whatever, and then have professionals as well. Just having that mix of conversation, I think is super interesting and definitely entertaining. And it's definitely, I don't know, everybody who's listening can kind of pick and choose what they want to listen to, I guess, but just having a great conversation around it. I got a lot out of it.
Yeah, definitely insightful, a lot, especially on the crypto stuff, because I've been asking questions about that for years, so that was helpful. But definitely things that aren't going away anytime soon. I think all of our friends, all of our listeners have probably gotten into this a little bit, or at least seen the headlines. So definitely valuable content.
Hopefully, I didn't sound too much like an idiot, not knowing all this Bitcoin stuff. But hey, if I did, you're welcome. And special thanks to our team that makes the show possible. We got James Leitner, who sets up all this amazing lighting, makes us look so good, and just did all the editing on the video stuff. You guys should definitely check out the video podcast if you haven't. I know we get a lot of listeners on iTunes, SoundCloud, Spotify, all those good places, but definitely check out the video. It's on YouTube at whoagnv.tv and on Facebook if you do facebook.com/WOGNV podcast. And of course, thanks to Sarah Lentz and to my co-host Michael Dees. And podcast fam, if you want to check out our sponsors, everybody who makes this show possible, definitely go to whoagnv.com/sponsors. Please support these sponsors. They are the ones that are funding all of this and making this happen, so we can continue to highlight great businesses and have very interesting conversations like this one tonight. And of course, when you check out those sponsors, make sure you say, I heard you on the WHOA GNV podcast, the podcast bringing you businesses and individuals that make you go, whoa. We will see you later. Bye. Whoa.